guests, industry leaders, regulators, and stakeholders. My name is Elizabeth Musa, and it's a real honor to welcome you to the Business Day Pension Conference. Nigeria's pension industry, now exceeding 18 trillion naira, stands as one of the strongest pillars of our financial system. It powers long-term savings, support infrastructure, and provides a sense of security for millions of Nigerians. But today we stand at a turning point. The National Pension Commission's Recapitalisation Directive, we are entering a new phase, one that demands stronger institutions, improved governance, deeper innovation, and above all, sustained public trust. The Business Day Pension Conference for 2026, which is our maiden edition, the first of its kind, is convened at a very defining moment. It's to help us to move beyond policy headlines to having the hard conversations. And really, that's why we're here today, to understand what this shift means for us, for the everyday Nigerian, those people whose future depends on this system. We also want to understand market competition. We want to understand the future of pension fund administration. So we'll come together, industry leaders today. We brought you all together this morning to discuss, to interrogate, to align, and to shape a pension industry that is not only stronger, but one that is trusted, because truly we believe that confidence is the currency that sustains any system. So once again, I'd like to say welcome. I'd like to warmly welcome you all. And thank you all for being here and being here very early. My name is Elizabeth Musa, and I stand before you this morning as your Master of Ceremonies. Thank you so much for being here. Please put your hands together for yourselves this morning. As we move on in our agenda, I'd like you to please join me in bringing up to the stage the editor of Business Day, Mr. Ololade Akinwele. Please do that with a round of applause, please. Thank you.
Thank you, Elizabeth. Thank you. I'm standing in this morning for the publisher, Mr. Frank Aigbogu, who's unavoidably absent. So I'll just go straight to his speech. Distinguished guests, esteemed regulators, industry leaders, policymakers, partners, ladies and gentlemen, good morning. It is my pleasure to welcome you to the maiden edition of the Business Day Pension Conference 2026, convened in collaboration with our official technical partner, the Pension Fund Operators Association of Nigeria, PENOP. We appreciate your presence and your shared commitment to advancing Nigeria's pension industry. Nigeria's pension sector remains one of the strongest pillars of our financial system, with assets hitting 29 trillion as of February 2026, and a vital role in long-term savings mobilization, capital market development, and economic stability. It continues to support national development while providing financial security for millions of Nigerians. However, the industry has reached a critical juncture. The ongoing Recapitalisation initiative by the National Pension Commission represents an important step towards strengthening financial resilience, enhancing governance, and improving operational efficiency across pension fund administrators. At the same time, reforms alone are not sufficient. Sustaining public confidence requires transparency, accountability, and consistent performance, particularly in an environment marked by economic uncertainty and evolving demographic realities, of course. Under the theme, Sustaining Confidence and Growth, Pension Reforms and Recapitalisation in Nigeria, this conference provides a timely platform to assess these reforms, align stakeholder perspectives, and define a clear path forward. Today's discussions will address key issues including governance, market structure, innovation, and strategies for strengthening trust and long-term value creation. At Business Day, we believe that meaningful progress is driven by informed, collaborative, and solution-oriented dialogue. We are confident that today's deliberations will deepen understanding of the reform landscape, strengthen industry alignment, and reinforce confidence in Nigeria's pension system as a foundation for sustainable economic growth. Let me conclude by thanking our partners once again at PENOP, our distinguished sponsors and speakers, and all participants for your continued commitment for advancing this critical sector. I wish you all a productive and impactful conference. Thank you.
Thank you very much to the editor of Business Day. Please, we would like the applause to be as loud as possible as we bring our speakers up to the stage. We know that we're still warming up, but real quick, I'd like you to just look to the person closest to you and the event this morning. Tell them welcome, you look good, with a lovely smile, with a nice, a nice note to how they look this morning. Everyone is looking really lovely, dashing suits and beautiful young ladies. Thank you so much for coming. We're moving on right now to our keynote address this morning, and our keynote address is focused on reform, resilience, and the road ahead for Nigeria's pension industry. And of course, we have our keynote speaker already present here this morning. Just like I mentioned, I'd like the applause to be as loud as possible. But before I bring her up stage this morning, she is the Director General, National Pension Commission, PENCOM, and she brings over 2 decades of distinguished experience in Nigeria's financial service industry. She was appointed in July 2024, where she assumed leadership at a pivotal time for the pension sector, with a clear focus on driving innovation, strengthening governance. Her career spans leading institutions including Citibank, Renaissance Capital, FDHL Consulting, Stanbic IBTC Bank, and First Bank, where she served as Group Head, First Shared Services. Across this role, she built a strong track record in financial management, strategy, and institutional transformation. She is a Association of Chartered Certified Accountants and a member of the Chartered Institute of Securities and Investment. She holds an MBA from the Manchester Business School and has completed executive training at INSEAD. At PENCOM, she is focused on sustaining asset growth, expanding pension coverage, strengthening risk management, and fostering industry collaboration to deliver improved outcomes for contributors and retirees. Distinguished guests, ladies, gentlemen, regulators, stakeholders, please join me as I make welcome the Director General of the National Pension Commission, Omolola Olowo-Yawo.
Distinguished guests, industry leaders, regulators, esteemed members of the press, ladies and gentlemen. Good morning. I'd like to begin by thanking the publisher of Business Day Media and the entire team of the Business Day Media team for convening this conference. Conversations like this do not merely reflect the health of our industry, they shape it. They challenge our assumptions, they sharpen our thinking, and most importantly, they compel us to act, whether as an operator or as the regulator itself. Today, I want to speak to you on 3 simple but critical pillars: reform, resilience, and of course the road ahead. Over the last 2 decades, Nigeria's pension industry has been one of the most successful reforms in our country. I dare say the most successful. We moved from uncertainty and arrears to a system that now safeguards over 29 trillion in assets under management. So Business Day, you should get your figures right. We are close to 30 trillion. But let me say this clearly. What brought us here will not take us to where we want to be. The next phase of reform must go beyond building balances. It must focus on building outcomes. Outcomes like inclusion, dignity, and real financial security in retirement. And critically, we must confront two uncomfortable truths. Too many Nigerians today will retire without enough income. And even worse, many will retire without access to health care. So our reform agenda must address this directly. We are therefore advancing a minimum pension guarantee because no Nigerian who has worked and contributed should retire in poverty. And also, sustainable healthcare access for retirees is very important because a longer life should be a blessing and not a burden. A pension that cannot sustain basic living and cannot provide healthcare needs is not security, and it's important that we provide a system that ensures security of retirees. That is why this next phase is what we called Pension Revolution 2.0. We are moving from protecting balances to protecting lives. And we also, global markets are also uncertain. We all know what is happening with the US. And in this environment, it therefore means no matter the conditions. And let me add this. True resilience also means protecting retirees from the biggest risks, outliving their savings and being overwhelmed by healthcare costs. So we must rethink both investments and outcomes. We must move from passive allocation of capital to active strategic investments, from short-term thinking to long-term value preservation, from conventional instruments that we are very comfortable with in the pension industry to well-governed alternative assets. That is why we are pushing for greater investment in infrastructure, stronger liability-driven investment frameworks, and innovative instruments to hedge inflation and currency risk. Because at the end of the day, resilience is about one thing: ensuring that every Nigerian who contributes today can retire tomorrow with confidence, dignity, and peace of mind. Now, moving to the road ahead. The road ahead will be driven by scale, inclusion, and impact. If we are honest, the biggest gap in our pension system today, it is not performance. Performance is important, but that is not it. The biggest challenge today for us is coverage. We have tens of millions of Nigerians in the informal sector, yet only a tiny fraction of that is covered within the pension scheme. Now, this is not just a pension issue. It is a national development issue. That is why we are we have reimagined the micro-pension plan into a more scalable model, the personal pension plan. Our ambition is simple: to bring millions into the scheme, to provide real financial security, and to ensure that every informal sector worker have access to not just savings, but to income protection and healthcare in retirement. But we cannot do this alone. We need fintech partnerships, industry collaboration, development support, and of course, support from the media. At the same time, we must ensure pension funds play a stronger role in national development. Just imagine this: pension funds financing infrastructure, Nigerians co-owning national assets, long-term capital driving jobs and growth. That is the future we must build. As we look ahead, one thing is clear. The industry itself must evolve. Operators, PFAs, PFCs, pension fund administrators, pension fund custodians, closed pension funds, and also the newly added member to the industry, accredited pension agents, must be stronger, better capitalized, better governed, and technologically enabled. Because the future we are building demands institutions that can deliver not just returns, but real outcomes. Income security, protection from poverty, and access to health care. Ladies and gentlemen, there's a 50-year-old school teacher in Kano who has contributed to our RSA for 18 years or longer. There's a factory worker in Onitsha counting down to retirement. There is a civil servant right here in Lagos or in Abuja who has never missed a contribution. They are not in this room, but they are the reason why we are here. And beyond income, they will face a deeper question. Will their savings be enough when illness comes in? Will they be able to live with dignity when work stops? Everything we debate here today, recapitalization, investment guidelines, coverage models, is in service of these people. That is the weight of our mandate, and it is a weight that I carry with utmost pride. Nigeria's pension industry has proven it can reform. It has proven it can be resilient. Now we must prove it can deliver through security, income security, health security, and dignity in retirement. We must prove it can lead. And I'm not just talking leading in Africa, but also Nigerian pension industry leading globally as well. The road ahead is not easy, but the good thing is that the road ahead is very clear, and we will work it all together. Thank you, everyone, and God bless you.
Thank you very much, Madam DG. Thank you so much for the keynote address. Just like she mentioned, our biggest challenge certainly is not the performance of the pension industry, but it's the coverage, and really that's why we are gathered here today, to actually move from conventional instruments to digitize the pension scene. And we hope that at the end of today, everyone is able to partner to shape this industry to what it should be, because it's standing strong, but I believe it can stand stronger. Moving on, we will be taking another presentation, a goodwill message from a seasoned financial service leader with over 18 years of experience in pension and administration, pension fund administration and wealth management. As the president of the Pension Fund Operators Association of Nigeria, PENOP, and the Managing Director and CEO of Fidelity Pension Managers Limited. He plays a pivotal role in shaping industry standards, strengthening stakeholder engagement, and advancing sustainable pension practices in Nigeria. It constantly and consistently drives innovation, leveraging technology and data-driven insights to deliver long-term value and financial security for retirement savings account holders. Distinguished guests, ladies, gentlemen, regulators, stakeholders, please join me as I make welcome Mr. Donald Onoa, is the President of the Pension Fund Operators Association of Nigeria, PENOP. Thank you very much. Please keep clapping till it comes up stage. Thank you.
I'm the DG, who just stepped out now. The Commercial Business Day benefits, distinguished guests, esteemed industry leaders and stakeholders, gentlemen of the press, ladies and gentlemen. It's my great pleasure to convey one good news and good news for the leadership of our association, PENOP, to all of you here today at this conference. This conference comes at the most auspicious time. The pension industry continues to play a pivotal role in strengthening economic resilience, meeting long-term savings, and safeguarding the future of retirees like the lady just mentioned. The team sustaining confidence and growth, pension reforms, and the current effort for our regulator to recapitalize operators in Nigeria aptly reflects our collective responsibility to innovate, collaborate, and uphold the highest standards of professionalism, pension administration, and management in Nigeria. The Nigerian pension industry has made significant progress. I think he was the first speaker we ended that I started that controversy of 18 trillion, which the media also tried to correct. As I February this year, the size of the industry is 29 trillion, short of 30 trillion now. Getting sustained growth, which is increasing the role in supporting long-term economic development of our country in Nigeria. Let's recommend the BusinessDay media for bringing together policymakers, regulators, operators, professionals, and other key stakeholders to engage in meaningful dialogue on issues that are critical to the sustainability and growth of the pension industry in Nigeria. This conference today is invaluable for knowledge sharing, team building, and exchange of best practices that will ultimately enhance public confidence in the pension system in Nigeria. As President of PENOP, I'm especially humbled at the opportunity to serve at such a pivotal time for the Commission of Pension in Nigeria. And through engagements such as this today, my mission is simple: to enhance collaboration, to deepen trust, and to support policies which create the enabling environment and ensure the continued growth and longevity of the pension industry in Nigeria. At PENOP, we believe that through sustained collaboration and constructive engagement, the pension industry can continue to contribute significantly to national development and financial inclusion. I encourage all of you here today to take full advantage of the discussions, workshops, fire chats, and talking opportunities provided by this conference. May the deliberations be insightful, the outcomes impactful, and the resolutions practical and forward-looking. On this note, I wish all of you a successful deliberation and a rewarding experience. Thank you, and please accept my best wishes.
Thank you very much. We'll now be proceeding to a special presentation on repositioning the pension industry for long-term impact, and this will be taken by the President and Chairman of Council for Society for Corporate Governance in Nigeria. It is a highly distinguished financial services and public sector leader with over 40 years of experience across banking regulation, pensions, corporate governance, and institutional development. He is best known as the Pioneer Director General and the Chief Executive Officer of the National Pension Commission, PENCOM, where he played a pivotal role in establishing and stabilizing Nigeria's modern pension system. Earlier on in his career, he served as the bank supervisor at the Nigeria Deposit Insurance Corporation, NDIC, and was appointed to the IMF to the Central Bank of Liberia, which reflects a strong global regulatory expertise. He currently chairs the boards of Polaris Bank and Credent Capital Advisory and serves as the president and chairman of the Society for Corporate Governance of Nigeria. He also happens to sit on as an independent non-executive director on the boards of leading institutions and has contributed significantly to governance reforms, which includes chairing the committee that developed the Nigerian Code of Corporate Governance for 2018. He holds a degree in accounting from ABU Zaria, a postgraduate diploma from Oxford, and is a recipient of the National Honor of the Office of the Order of the Niger. He will be joining us virtually today. Distinguished guests, ladies, gentlemen, please join me in making welcome the President and the Chairman of Council for the Society for Corporate Governance for Nigeria, N.K. Ahmad, OON. Please give him a round of applause as he joins us virtually today.
Good morning, distinguished colleagues. Good morning, Gigi. Good morning,
Everybody is an expert, everybody is a media expert, and therefore sometimes people can be quoted or misquoted, or quoted out of context, or the text quoted out of context, as the case may be. But all the same, I believe is an opportunity for us to share the views. There's no doubt about it. As an industry, we've moved from a huge deficit in terms of our inability to honor our obligations as employers to a more stronger industry. As you are aware, in 2004, which incidentally coincides with when BusinessDay also emerged in 2021, about 22 years ago, is that we had a deficit of over 2 trillion. So in other words, the public sector in particular could not honor its obligations. We had other schemes, but they're struggling. Thank God today, we have close to 30 trillion naira in asset under management as at the end of March this year. So I believe this theme today is relevant and is extremely important, and I'm happy that the DG focus on reforms, resilience, and the future ahead of us. Now, perhaps the major issue is the recapitalization. This is an asset manager. Why are we as an industry imposing huge or high levels of capital requirement But let's look at the trend and the transition. And I hope my slides are being projected so that at least colleagues can follow through. But we started with 150 million. And today, and so that time we are managing less than 1 trillion. Today we are managing 30 trillion assets. So obviously, even with that size, it makes sense that any entity that is managing or entities that are managing such huge level of assets should have sufficient capital. And there's where capital is meant to do a number of things, which of course largely saying that one, you need capital to be consistent with the level of your business. But beyond that, you need capital, not just for, it's not a penalty. It's not saying that, yes, as PENCOM, as an industry, asset managers or PFS or custodian must give that. But it's in the interest of the industry and also in the interest of the players. You can't manage huge assets and then you don't have capital to support the level of your business. Capital that you need even for your resources. You need to deploy IT, technology. You need to hire the best staff. And of course, you need to have a very strong and resilient operational standard that can provide that. So that is it. And let's also look at the other issue. And the issue is that today we have high concentration of assets within few PFAs. In fact, 70% of the assets are being managed by only 5 PFAs. That says a lot. So which means that there are few PFAs that are managing huge assets. And if they continue to have lower capital, obviously provide, I think I'm on the next slide. You can move your slides, please, so that colleagues can follow. Yeah, another one again. Another one again. Another one. Another one. Yes, please. Thank you. You could see that, in fact, one of the PFAs manages about 33% of the assets under management. So obviously, that calls for a huge capital requirement. And I believe as we move on to particularly risk-based framework, perhaps there will even be higher capital. So what are we saying? Essentially, what we're saying is that we need recapitalization, not just for the industry, but even for the respective operators. We want to build confidence. I want to build trust. And the only way you can do that is to look at the level of capitalization by shareholders of their respective businesses. But it's also important beyond recapitalization, which is the theme of today's part of the theme of today's discussion, is that there are also other concurrent reform initiatives under the leadership of our current DG. And I think it's important for us to reflect on that, acknowledge, comment, and also encourage the industry regulator to work on it. Largely includes, of course, as you are aware, there is now what we call pension revolution 2.0. And what is the essence? The essence is how do we improve service delivery standards, largely. How do we ensure that, yes, our reaction or, of course, our response to our customers is as efficient as should be. Of course, recently, the industry also launched Pen Care. As we are aware, Pen Care is a health insurance scheme being provided for the elderly retirees that are 65 years and above are going to be giving free health insurance. Now, what that means? Essentially, this is phase one, and therefore we're starting for those who are earning less than 40,000 currently. And I believe as we move on, other retirees will also have that benefit. Now, this is an important component of this particular reform, given the fact that the older we are, the more we require health care. And at a time, perhaps, when our resources cannot even cater for our respective, I think it's on the next slide, please, our respective health needs. Besides that, of course, PENCOM had also introduced the PPP. And largely the PPP is to look at how do we get the informal sector. As you're aware, we're still struggling. Yes, we have about 11 million Nigerians that have joined the contributory pension scheme. But given the fact that, which is still under 30%, and given the fact that substantial part of the informal sector are not covered, how do you get them covered? I think as not just as media, but of course as stakeholders, how do we sell this? How do we encourage Nigerians to look at this and say, yes, this is something that we need to work on? PENCOM are also as part of stakeholder engagement and also expanding the coverage. PENCOM has been engaging NICOM, ICPC, and social partners. One thing I want to emphasize, distinguished colleagues, is that this industry succeeded because the social partners supported the reform. And who are the social partners? You have the workers or the union, basically TUC, NLC, NUP. You also have the employers, NECA and other related institutions, basically. And of course, the third level, which is largely looking at a significant part of the other stakeholders. And these are stakeholders that got committed and encouraged. And I'm happy that I think this week or last week, I can remember, the DG had discussions with TUC. And that was very fruitful discussions. In other words, labor union or labor representatives are willing to reach out and find out who are those employers and employees that have been reluctant in joining this new scheme, even in the formal sector. And I believe if you're able to do that, then the compliance grows, because this is a scheme that benefits everybody, and I hope that is also important. The DG also made reference to asset classification and alternative assets, and we're happy to note that this has been reviewed and is still being reviewed, such that we'll be looking at investing in infrastructure and other long-term assets that will support GDP growth largely. And I hope this is something that is also going to be discussed in today's conference. ESG is an important aspect. It's also part of the minimum requirement, and I'm happy that this has also been looked at. How do we deploy technology? And I'm happy that standards are being introduced such that operators will invest. And I would still want to encourage operators, please deploy. Why do we need technology? We need technology for 2 or 3 reasons. Not just efficient service delivery, but also transparency and accountability. If I can have information online real time, I will trust you. But if I have to struggle to get information from you, it becomes extremely difficult for me as your customer to reflect as to whether indeed it's something that can be done. So I hope you'll appreciate and understand the requirement by PENCOM and ensure that we have significant operational efficiency. 2 major things that has happened, and honestly, this has not been projected, and I think we need to project it. This government has introduced 2 key additional reforms that supports the contributory pension scheme. The first one is the accrued pension right. This government has committed 758 billion. One of the greatest challenges we had in the public sector, particularly federal government retirees, is that because the transition period initially was short, 5 years, as a result of which employees did not have sufficient time to accumulate. And that's why accrued pension right was supposed to be computed. Now, this is a struggle PENCOM had been going through with previous government. They are not willing to do that, and they do that on piecemeal. Now, today, we have government that says, hey, we are prepared to inject close to 1 trillion. And I hope this will be fully funded and also invested. So even by investing this, it reduces the liability or obligation of government in future payment. The government has also introduced gratuity provisions for its employees. And in fact, one high-level individual actually asked me, so gratuity is back. I said, yes, gratuity has always been part of the Pension Reform Act. because it provides that employers can pay additional benefit over and above the minimum contributory pension scheme contribution. And indeed, in the private sector, and or schemes that are either closed PFS or continuation of existing scheme, gratuity has been there. So this is also another bold step by the government. It's a huge amount, and perhaps what we need to do is to encourage the government to fund it, because as you're aware, policy inconsistency, and if you're not careful, somebody comes to say, I'm not sure it's something that I want to continue, even though it affects your staff, it affects the livelihood of those who work for you. But as you are aware, it's a major issue. So for me, these complementary reforms are reforms that will strengthen and ensure the sustainability of the industry. So what are the next phases? What should we be looking at? What do we expect? We expect, of course, PENCOM and in industry will lead wider coverage and compliance, particularly with the subnationals. As you are aware today, many of the subnationals are yet to ski in. And the reason is simple. They are not compelled to join the scheme because of a constitutional provision, but they were encouraged to do that. And I think we must find a way of saying, how do you get them to join? Beyond, what do you call it, issuing laws and regulations. It's a discipline. It's a discipline that we should be encouraging them to do that. And for God's sake, today, more than any time before, subnationals have made a lot of money. Substantial part of the money that is being made by government goes to subnationals. In fact, some people will tell you that in the first 18 months of this this government, the money that has been made was much higher than the 5 years made in the previous by the previous administration. So how do you encourage subnationals, not just to invest in infrastructure, but also to invest in their own people, and of course the informal sector? I'm happy there's a lot of effort in terms of securing the industry and making it more efficient, but of course the governance structure, and I believe I understand it's being reviewed, but it's something that is also important, that we have a very strong governance structure. As I said earlier on technology, but also on human capital. We should be able to recruit and retain the best hands. This is an industry that has come of age, and this is an industry with 30 trillion. We should not continue to shy away from investing significantly. And that cuts across whether operator or the regulator or other participant in the industry. Then, how to ensure operational certainty? We need to be efficient, and we need to be specifically that. The other issue, which I believe is also going to be discussed today, is we are 30 trillion. And as DJ said, we are largely invested in passive and structured investment. Then where we can align and ensure that now that this is growing, that indeed we can look at other alternative asset classes. Of course, for me, the most important thing as far as other alternative asset classes is that how do we ensure that we can de-risk such investment, because this is a long-term investment. And I can tell you, those of us who have been following investment in infrastructure in Nigeria, you know, if you take, what do you call it, Edo to Asaba Road, okay, a federal government road, but there's still a struggle. And the struggle is that one government decided to give it to an individual who didn't have the capacity. Now he has abandoned it. An effort has been made to revoke it. He has gone to court. And in the process, as an investor, when you come in, why do you start? A huge problem. So obviously, so we need to work with development financial institutions and other institutions to see how do we de-risk. Are there guarantees? Are there pilot projects? So that we have proof of concept, and therefore will be in a better position to invest. But beyond that, we're even coming together as consortium to say, hey, we can support this infrastructure, and we believe it would be, but it has to be clearly defined that. The other issue is the adequacy of benefit. Of course, inflation, this government has done well in trying to moderate inflation, but as it's always been said, and I think even in the initial opening remarks by Frank, there is the fact that yes, inflation has gone down, but purchasing power is still very low. So people are poorer. So in that respect, how do we ensure that you protect and project and sustain adequacy of benefit? And there are so many instruments, and I believe PENCOM is looking into that. Yes, risk-based supervision is something that is being fine-tuned, and it's something that we need to look at. But for me, is while we are looking at the industry and the operators, as regulators, we also need to look at our resilient in terms of supervisory framework and how to manage crisis. So in other words, let's anticipate crisis, because we're growing, and as we're growing, a lot of things come in cybersecurity and so many other things. So what can we do to ensure that we are protected, and we should be ready? So that, in other words, we don't become reactive, we don't become ad hoc, but we plan. And I'm happy that this is something that's being done. And I'm also happy that PNOC is also trying to review his strategic plan with a view to look at some of these issues. So just to conclude, colleagues, is just to remind ourselves, who are we and what are we set up to do? Largely is to ensure that, and this is what is in the law, that every worker receives his benefit as and when due. And that's the only way you can build trust. That's the only way you can attract confidence and get more people to participate. So obviously, the second issue, of course, is that how do we ensure the sustainable pension system that is not only stable but predictable and is fully funded? So having a more efficient industry. How do you ensure more transparent and efficient management of pension assets? Incidentally, this reform is succeeding because it's the private sector that is managing these assets. So to that extent, in terms of you can predict, you can also be sure that the things are going to be done correctly. And and you have a capable regulator who will say, this is how we should do things. So if you don't do it that way, you're in trouble. The regulator must be very consultative. And in fact, that is what saw this industry. Whatever regulations we're going to have, we carry all the stakeholders. So by the time these regulations are issued, they become part of our own initiative, and everybody will own it, and it becomes, we must also be responsive. So in other words, we don't need to be ad hoc, but at the same time, we need to be as effective as possible. Yes, we are accumulating long-term assets, and these assets must be efficiently and effectively utilized. If we support the economic growth of this of our dear country, obviously we're also saying that we're supporting the growth and development of our industry. So obviously that is important. So in conclusion, yes, let's work together as stakeholders, as a team, to build confidence, build trust, and ensure that yes, today we have 30 trillion, and in the next 3-4 years, we are going to have 60 trillion. We are only 22 years old, and we believe in the next 5 years, we should be looking at much higher than that. So once again, distinguished colleagues, ladies and gentlemen, I would want to thank you very much for the opportunity to speak. I'm sorry I spoke slightly longer than my time, but once again, thank you very much, and God bless. Thank you.
Please, thank you very much. One of the focus areas for today's engagement, I'm happy to see that our speakers have been addressing that. One thing that has resounded is the fact that we have assets of about 30, we've established 30 trillion, so it's not 18. So that's for sure. But we want to make sure that at the end of today's engagement, there's clear understanding of recapitalization, of requirements and regulatory expectations. We want to make sure that we're able to interpret PENCOM's recapitalization and reform agenda, which we sure hope that we've been getting so far so good. And we also want to examine the implications of this recapitalization for competition, for consolidation and market structure, and all of these things are some of the things that we hope that at the end of today's engagement, every single person is able to get some clarity on, and we're able to foster the partnerships necessary. So at this juncture, we will be taking our first panel of the day, and just like I said at the start of the event, we want to make sure that everyone stays engaged. So please, as much as possible, please welcome them with a round of applause as they come up stage. And number two, please put down your questions, because there will be opportunity for engagement immediately after the panel. So we don't just want it to be one-way ticket. We want it to be something that is engaging as much as possible. So our first fireside chat today will be two people, and this one will be focused on deploying and mobilizing capital and investment in a shifting global economy. Our speaker for today is the acting MD and CEO of Access ARM Pensions, but please let me welcome her and read up just for you to know a little more about her. She's a seasoned investment professional with over 20 years of experience across local, regional, and global financial markets. She currently serves as the acting managing director and chief executive officer of Access ARM Pensions, where she provides strategic leadership and drives organizational growth. Prior to this role, she was the executive director at investments at Access ARM Pensions, where she led the firm's investment strategy and portfolio performance. She also served as the executive director in the investment division at ARM Pension Management, where she contributed to asset growth and portfolio optimization. Our international experiences include roles at Fidelity Management and Research and Alan Gray, where she gained exposure to global investment practices. Distinguished guests, ladies and gentlemen, please join me as I make welcome the acting MD and CEO of Access ARM Pensions Limited, Abimbola Suleiman. Please do so with a round of applause, please. Thank you. Thank you very much. And moderating this panel today, we will be welcoming our distinguished moderator for this fireside chat. Is a seasoned risk and pension strategist with over a decade of experience shaping retirement security frameworks in Nigeria. As a managing consultant at Camford Partners Nigeria Limited and sales manager at Custodian Life Assurance, where he has led the design and management of annuity portfolios, ensuring long-term financial security for retirees while driving over 10 billion naira in revenue value. He's also a member of the Nigeria Economic Summit Group, where he contributes to national discourse for fiscal policy and workforce development. Please join me and make welcome the managing consultant at Camford Partners Nigeria Limited, Mr. Terry Ferdinand. Please join me in making him welcome for the fireside chat. Do we have him in the building? Okay, yes, please. Please keep the applause coming, please. Thank you very much. So we're actually behind time because this fireside chat was supposed to be from 10:55 to 11:15. So please, we'd like you to please make it as brief as possible. Thank you very much.
All right, good morning, everyone. I'm excited to be here. I'm sure you're also excited to be here too. Great. So today we'll be discussing the topic, deploying and mobilizing capital and investment strategies in a shifting global economy. One of the few things we'll be exploring today would be the impact of macroeconomic trends and inflationary pressures as well. We'll be looking at how infrastructural financing will go into all of these as well. And also we'll be looking at the alignment of pension fund investments with national development priorities. So, Abimbola, it's a pleasure to have you here today.
My pleasure is all mine. Good morning, everyone.
All right, so very quickly we'll be diving into the global economy, and we will explain the trends as well. So today we'll be looking at the evolving global and domestic economic landscape marked by inflationary pressures, currency volatility, shifting investor sentiment. What are the key trends that are influencing how pension funds approach investment decisions?
Right. Good morning again, everyone. And like we've been instructed to do, we'll try to make it very snappy. I think just in line with what pension management is, it's a very long-term industry. So when you think about the trends, we focus really on the long-term trends we're seeing rather than, sort of the developments over the last 12 months. So if you go back before the financial crisis, the critical trend globally in the pension industry was a shift from defined benefit schemes to contributory schemes because, as Dr. Ahmed was saying earlier, this unfunded liabilities was really a global trend. It was not unique to Nigeria. And so you were starting to see internationally a shift from DB schemes to contributory schemes. Now, when you have a contributory scheme, you see that the liability is transferred from the sponsor or from the employer to the contributor. And so in that time frame, I'm talking about over a decade ago, certainly pre the 2008 financial crisis, the investment environment was not as resilient as it is today because you had just transferred the liabilities from sponsors and governments and employers to the individuals. And so in that scenario, you had an investment behavior where you're contributing into a fund and it was essentially treated like any other asset management business, very static benchmarks. So when pension funds were assessing themselves around are we sort of delivering what we're supposed to be delivering, it was very focused on the way we would see in the mutual fund industry, for instance, the group beats the S&P 500. Fast forward to 2008, you had the global financial crisis, you had this interest rate environment that was really depressed and actually the threat of deflation. So asset allocation was essentially built around the expectation that inflation was going to be low for long and that interest rates were going to be very low and therefore not as much dynamism. If we come to the world we're in today, it's a world of high volatility, it's a world where inflation has come back with the crisis much higher and much more embedded than anyone expected. So if you were in 2012, 2013, globally, we can draw the parallels in Nigeria. No one thought inflation was going to come back as quickly as it did and as elevated and sticky at the top as it has now become. So inflation is even a big challenge in Nigeria, it's a big challenge in the EU, it's a big challenge in the US. And so pension fund managers are now in this world where we're now having to adapt to significantly higher inflation expectations. And of course, as a pension manager, your primary role is to preserve the purchasing power of your contributors, whether that's a DB scheme or a DC scheme. And so we're seeing investment behavior has really shifted to more dynamic asset allocations to cater to the fact that the traditional sort of static benchmarks is not going to deliver the kind of returns that you expect, given where inflation is at globally, where the inflation drivers are, and therefore where the inflation expectation is. So some critical outcomes that you've seen from that, the shift towards private markets. So whether that's in private equity, private credit, real estate, infrastructure, with an understanding that we are in a completely different global economy now, and that the world of the public market, where the S&P 500 was sort of the global growth is being driven by innovation, by venture capital, by technology, by sectors and drivers that are not yet fully represented in public markets. So we're seeing that global shift towards private markets, and we're seeing that in Nigeria as well. We're seeing significantly more effort put into dynamic planning, so not as much static benchmarks. You're seeing more effort on cash flow matching, for example, asset and liability management, and risk-based planning to ensure that as a pension fund, you're able to deliver that mandate, which is to exceed inflation in what you do. I think the only aspect I'll add to that is a change in thinking around ESG. And ESG is an emerging theme for investors globally over the past decade. But I think that the world is approaching ESG now, not as philanthropy and not as just a focus on impact, but how you can build those sustainability things into your investment process in a way that it still delivers, a commercial return, but that you're focused on sustainable outcomes for the economy, but also inherently then for your contributors.
Well said. And just following up with that, we want to also explore the strategic capital deployment for national development. And exploring that, we want to see how pension fund represents one of the largest pool of long-term capital in Nigeria. How can PFA strategically deploy these funds to support infrastructure and other productive sectors while ensuring capital preservation and safeguarding contributors' assets? That's it.
Yeah. I think you're alluding to this perennial conflict between the obligation to use the pension fund assets for, or the imperative, I don't call it an obligation, to use the pension assets to promote national development, particularly in the area of infrastructure, but also the fiduciary responsibility of PFAs to protect their contributors and contributors' interests above all else. I would say that those trade-offs, those two objectives, they shouldn't be mutually exclusive. When you done properly, you can achieve both aims to ensure that the assets, again, this is the largest pool of long-term capital in the economy, so it's clear that this is really where the conversation should start as you think about, how does Nigeria finance, its infrastructure deficit. So for the pension industry, obviously, we're regulated, so the means with which we will look at the infrastructure opportunity. Firstly, we deploy assets towards infrastructure through fund managers. We will not directly be investing in infrastructure because that's not what we are built to do. Now, when fund managers bring infrastructure opportunities to us, what are we looking for? We're looking for very visible cash flows. We're looking for cash flows that are visible, that are ring-fenced, that are contractual. And we're looking for governance around that is transparent and that can live through multiple cycles. In the case of market development that we are in, the reality of our country, a significant proportion of the infrastructure assets you're going to see are going to be government-backed. One of the critical requirements is some level of political risk guarantee. And some level of governance that is separated from the political process of the country. Infrastructure financing and pension fund investing are very long-term in nature. The last thing we want to see is for the profile of the project or the return profile to change every 4 years with the election cycle. So clearly that governance, I mentioned the last bit, is really imperative. When we look at the criteria that are listed, and the itself with certain types of investment. I think what we tend to see now is a preference for infrastructure debt, just because of the visible and contractual cash flows. Also, a preference for brownfield assets, which is mature assets that are producing cash already, so you can see where your return of capital is going to come from. So not as much appetite for development infrastructure, where you have to spend 3 or 4 years or even longer in the construction phase, and where the outcomes are not quite clear. I think, like I said, this is really a function of where we are as a country, and as the economy itself matures, and as the pension industry matures, you will see the opportunity and the natural evolution of pension assets starting to fund greenfield infrastructure, starting to go into equity tranches rather than just senior and guaranteed debt. This is really the opportunity lies. The bottleneck today, I would say, is really on the supply side. So it's not from the fact that PFAs are not willing or able to deploy, but the pace at which the pool of infrastructure investments that check those boxes that I mentioned is really slow.
Well said. Well said. All right. So we also want to explore asset allocation and diversification strategies. And in doing that, we want to see, in the face of global economic uncertainties, we see what's happening around the world at the moment, market volatility. How should pension fund managers rethink asset allocation, particularly in balancing domestic investment opportunities with international diversification?
Well, I think that conversation maybe is timely now that I was saying earlier. And I'd like to remind people, this is a really young pension scheme in the global context. The Act was in 2004, now it's 2026, so really 21 scheme. Even in Nigeria, if you think about the sectors of the economy, there are very few sectors that are less than 20 years old. So, international diversification is a natural evolution that happens in pension schemes as they mature. I think we are at the point where we should be having that conversation. We are at that stage of maturity, but I don't think the fact that it hasn't happened over the last 2 decades is necessarily a negative. We just wonder, again, if you put that on the backdrop of the fact that we are operating in a country that is very capital hungry, sometimes it's difficult to justify taking your capital internationally when there is obviously very dire need in the domestic market. But if you look at skills that are similar to ours, you took inspiration from Latin America, from Chile, from Mexico. Many of them at this stage of development between the year 10 and year 15, you start to see very clear push towards diversifying internationally. The international diversification serves 2 or 3 purposes. The first one is just access to foreign currency, particularly in markets like ours, where the currency devaluation pressure is a bit, endemic. When we look at international diversification, it's not necessarily only about within the country. It's to ensure that we have currency diversification within the portfolio. And I think we have started that. We are starting to see, when we look at overall pension assets, significant in the context of where we're coming from, exposure to US dollar and to foreign currency, but that is still largely domestic foreign currency assets. So we are not seeing non-Nigeria assets, but we are seeing non-Naira denominated assets. So that is the first step. I think the natural next step would be starting to put international diversification into the picture in a real measurable way and in a manner that does not introduce excessive risk into the pension assets. Beyond the currency protection, you get access to sectors that are either not really mature in a local environment or that are just not available. If you look at the global driver of growth today, it's tech, it's advanced tech, it's AI, it's investment in data centers, all of those things. We just don't have the opportunity to invest in per se on our continent. So international diversification has its merits in the sense that you get access to this new biotechnology. I can mention 2, maybe even 5 thriving sectors that you just don't have an opportunity to invest in Nigeria, possibly even on the African continent. So it serves that purpose. And beyond that, it gives you insulation from local macroeconomic risks. So all of the crises that Nigeria went through over the last year and a half, real measurable level of international diversification might have protected pension savers a bit better if we were not so domestic market focused.
Well said. And I'm sure that will also provide extra context. Just reviewing the policy and regulatory frameworks for infrastructure financing as well. Nigeria has long discussed unlocking pension funds for infrastructure financing. What structural reforms, policy frameworks, and risk mitigation mechanisms are required to make this approach scalable and also sustainable?
Right. So I think I mentioned earlier that the first thing we need from the government is just political certainty. So the outlook for policy should be clear. It should be, sort of not in doubt. So beyond that, what sort of structures do you want to see? So typically when the government or the policymakers provide that backdrop, the markets will innovate and do what they need to do to thrive. So we are already seeing innovation on the infrastructure side. Again, I said, the operatory fund managers. So some of the fund managers that have been most successful have been those that have firstly offered sort of pooled infrastructure debt type structures. And like I said, infrastructure debt is attractive because there is clarity and alignment around the traditional asset classes that we are comfortable with, but also those checkboxes we like to see predictable cash flows that are reinforced in governance structures. So when you have fund managers who pull 2, 3, 4, 5 infrastructure type projects within a debt fund, it can be very attractive to pension funds because it gives you the type of exposure you're looking for, but it mitigates the risk by putting that diversification into the portfolio construction. So you are not dependent on, for instance, the Lekki Expressway performing. There was a toll project there, and that would be a project that would naturally have been attractive to pension fund, but then we see how that turned out. But if you're in an infrastructure debt fund that has that and then has a housing project and a power project and a telco project, the overall risk profile and cash flow profile can be really good. Outside of that, we do have this blended finance structure that have become a bit more common when you have DFIs or other agencies with a different risk profile coming into the capital stack to enable pension funds either provide senior debt or provide equity where they can put a capital sleeve there, maybe with a different return profile, providing first loss capital, providing tranches that are subordinated so that pension funds can come senior and the blended overall capital pool works. So when we are able to really partner with those kind of structures, we have found great outcomes, and I think that that's where growth will be in the near term.
Very well said. This is going to be a fine place to conclude our thoughts in this conversation. We want to believe that not only have you been able to bring fresh insights, industry experience, and lived expectations that would help the pension industry grow, but also be reassuring to would-be and future pensioners. I would like to say on behalf of the publishers of BusinessDay, a big thank you to you, and I'm sure the audience here to find your time very valuable with us today. Thank you very much.
Thank you. Thank you for having me. Thank you very much to our lovely fireside chatters for that very constructive dialogue. Please, once again, put your hands together for them, please. Thank you very much. Our next panel today, but just before our next panel today, I just want to make a quick announcement. We have something called our premium website. This is where you get conversations, this is where you get insight that you wouldn't find on the regular Business Day website. This is where you get access to exclusive stories, exclusive news, and we'd like you to stay connected with us there. We have a discount going on right now, and we have one of our colleagues, Michael, will be at the back to provide you more insight on Premium Business Day. But if you've not subscribed, it's premium.businessday.ng, and we have Michael at the back to give you insight. He's putting on a pink shirt, so you could just ask for Michael. He is the go-to person for Premium Business Day. On that note, we'll go to our first panel for today. Just like I said, let's keep it as engaging as possible. Let's stay attentive. Let's stay engaged in the session today. We have two panels and we'll be done for today. So I'll make welcome our panelists, and please, as I bring them up stage, I'd like you to make them feel very welcome with your round of applause. Our first panel will be focused on pension reform and recapitalization, building a stronger and more resilient system. And this panel, we have 4 panelists and obviously 1 moderator, and in no particular order, I'll be inviting them to stage. Please do well to welcome them with your round of applause this morning. Our first panelist today is the managing partner at HRISP Partners Limited and the program manager Africa for Pan-Africa Fund Management Alliance, which is PAFMA. But just before he comes up stage, I want to read a little bit about him, just to give us a little bit of context on who is coming up stage this morning. But for some reason, I'm just trying to find, just give me a moment. So he's the founder and the managing partner at HRISP Partners Limited, an impact and alternative investment advisory firm focused on connecting capital to high-growth opportunities across Africa. He also manages the Pan-African Fund Management Association, which is PAFMA, a platform that brings together pension and non-pension fund managers across the continent. Previously, he served as the pioneer CEO of the Pension Fund Operators Association of Nigeria, PENOP, where he led strategic stakeholder engagement with regulators, government, and international institutions, where he advanced an industry managing over 15 billion USD in assets. Distinguished guests, ladies, gentlemen, please make welcome Oguche Aguda, the managing partner at HRISP Partners Limited. Thank you very much. And the next person on our panel this morning is the Chief Investment Officer at Access ARM Pensions. And just like I said earlier, as I invite them on stage, please make them feel welcome with your round of applause. He is an accomplished investment professional with over 15 years of experience across leading financial institutions, including ARM Investment Managers and Ecobank. He currently serves as the Chief Investment Officer at Access ARM Pensions, which is one of Nigeria's foremost pension fund management, where he oversees 4 trillion naira in assets under management. In this role, he manages institutional portfolios across fixed income, equities, and alternative assets with a strong focus on risk management, regulatory compliance, and long-term value creation. His expertise spans portfolio strategy, asset allocation, and investment governance. Distinguished guests, ladies, gentlemen, make welcome the Chief Investment Officer at Access ARM Pensions, Wale Okuriboye. Thank you very much. Thank you so much for the applause. It's really encouraging. And next on our panel this morning is the Executive Director for Sales and Investment at Leadway Pension PFA Limited, but is well represented this morning by Benga Dada, which is the Head of Business Development at Leadway Pension. Thank you very much. And last but certainly not least on our panel this morning is the Head of Strategy and Corporate Communications at FCMB Pensions Limited, with about 20 years of experience in Nigeria's pension industry. Since joining the industry in 2006, he has built strong expertise in strategy, business development, corporate communications, and sales, with a consistent focus on driving growth and enhancing customer experience. He's also a certified strategy professional of the Canadian College for Leadership and Management and an associate member of the Chartered Institute of Development Finance in South Africa. Distinguished guests, ladies, gentlemen, please make welcome the Head of Strategy and Corporate Communications at FCMB Pensions Limited, Adewale Fagbero. Thank you very much. And to moderate this panel excellently for us this morning is the Managing Director at Uhuru Investment Partners. She is someone who has led and continues to lead private equity investment activities across origination, execution, and portfolio value creation. She brings over 15 years of experience across private equity, investment banking, and operations in Africa and Europe. She holds an MBA from INSEAD and a BEng in Material Science and Engineering from Imperial College London. Distinguished guests, ladies, gentlemen, make welcome Amaka Paul Okafor, the Managing Director at Uhuru Investment Partners. So because we are behind time, about 10 minutes behind time, we'd like for we know that this panel is going to be very engaging, but as much as possible, we're trusting our moderator to make it, yes. So I'm just going to pass it.
Okay.
So morning, everyone, and thank you for joining us. So just getting straight into it, we've had an introduction to the session. The session is really about one central question, which is, how do we implement this recapitalization we've heard so much about in a way that strengthens the industry but doesn't destabilize it? So the way I'm hoping to structure this conversation is to kind of thematically group some ideas and then take us through questions with the panelists along those themes, okay? So let's get stuck in. So just focusing on the recapitalization directive itself, we're thinking about thresholds, timelines, and all the practical realities of implementation. So if I go to you, Mr. Aguda, From your vantage point across the industry, how do you think regulators and operators should balance these implementation timelines we've been talking about with the actual operational realities you face on the ground? And how do you think about compliance in that setting without unsettling the kind of confidence of the consumers there?
Yeah, I think for the operators, it's more about clarity,
Okay.
right? The last thing you want as an operator is you're not sure whether you are going to meet the deadline, whether you actually want to recapitalize, whether you are joining with someone.
Yes.
And you destabilize staff. You know, if you work in a firm or an industry where there's potential recapitalization, you know, the staff are thinking, am I going to stay? Are we going to stay? Do I jump ship? So I think the first thing is clarity for operators. And the regulator has tried to be also clear. You know, there have been issues, people saying, should we extend it? Should we reduce it? And the regulator has stuck to their guns. So from that point of view, regulator is clear. So what needs to happen now with the operators is to be clear also.
Okay.
Am I going to give my license back? Am I going to merge with somebody? And if I am, how is that going to be? So we have about 14 months, right?
Okay.
You know what happens typically, you know, some people wait until the end, but for operators is to start early and be clear. And clarity helps in everything, in your strategy, in how you are engaging, and who you are engaging with, in the advice. So I'd say, you know, that's very, and it starts from the board.
Okay.
Right, starts from the board because the staff are not the ones going to raise money. So the board has to be clear. The governments, they have to give that to the management, and it has to be clear across board. So I think that's very important, and also that partnership between the regulator and the operators, which Dr. M. K. Ahmad alluded to, has to be clear. Where it's one voice coming from the industry. This is what we want to do, and this is why we are doing it. It's for resilience. It's for growth. It's for infrastructure investment. Some of the things spoken about. So that clarity has to be there. I think that's key, and that's where we need to start from.
Great. Okay. So that's super helpful. Maybe from the perspective of an operator, thinking about what the PFA is actually having to do in practice to think about meeting these timelines. Maybe Mr. Okunriboye, you could give us an insight as to what you're doing from the inside out to address this.
Okay, so typically the process would work for capital raising. You first of all carry out the gap analysis or capital assessment. Where are we relative to the revised guidelines? Thereafter, you then look at the options that are available to you to sort of like close that gap. Typically, if the gap is not significant, then internal capital is always the best form of capital. So maybe some management teams or boards may propose going through retaining capital, retaining profit as a means of meeting that capital requirement if the gap is not significant. If the gap is large, you can then look at external capital options, which may involve things like rights issues, private placements, or all options that basically you could explore to sort of try to meet that gap. If the gap is significantly large that you think these external options may not work, then you then explore the option of M&A activity whereby you want to merge or acquire other pension fund operators. So typically, this range of options will be explored. The boards will deliberate and come to a position, and whatever position they adopt, they will then circularize with their shareholders, get the required shareholder approvals, and then proceed to execute to meet ahead of the regulatory timelines. And then, of course, once you raise the capital, you then post capital, you carry about whatever. I mean, you're not just raising capital for capital's sake. You're also going to, as M.K. Ahmad said earlier, you also need to deploy whether you're going to invest in technology and so to sort of try and bolster your ability to deliver excellent services to your customers. So overall, I think that's what the process sort of looks like. I hope I said that. Thank you.
No, that's super helpful. So you've talked about potentially a small gap, a big gap. You'll have to address things accordingly. How do you think about service continuity in the context of that? So is there any chance of, service being interrupted as a result of maybe not meeting those thresholds? How are you kind of, pragmatically thinking about that?
So I think the beauty of the pension industry is it's the company is separate from the fund managing the fund. So business as usual will continue. So the capital requirement is primarily for on the company side. And so just as Okuche said, it's a shareholder decision, a shareholder conversation. So it's not as if you're going to take out of your current business and go and use it to shore up your capital.
Yeah.
Whatever the options are. So if it's a small gap, you have to retain your profits. So typically the profits you had earned during the year which you're retaining, or if it's you have to go and raise external capital, then the shareholders will typically appoint external parties to sort of like investment bankers sort of go through that process. So within your own business, you continue to run your business. Obviously, you have to manage your customers because customers will be looking out for things like, oh, these guys make it or would they not make it? So providing a disclosure around your level. So for example, we're coming to the end of the audit period. Most companies would have completed their audit. So we're able to see where everyone stands relative to the revised capital levels, and we can estimate how much each person has to raise. I think the industry number is around, people say between 250 to 350 billion naira would need to be raised. So that gap will need to be raised by some measure, whether it's internal or external. And business as usual will continue. Most importantly is to provide communication to clients to assure them that, look, this is where we are, this is what the steps we're taking to sort of like meet that gap, and we assure you that we'll be able to meet that gap in line with before the deadline. I think that's the most important thing for people to sort of assure customers. But you will still continue to run your businesses. We're still a regulated entity, so we still need to do what we need to do on investments, meeting cost benefit payments, and providing an excellent customer service delivery. That will still continue.
Okay, super, thank you. Maybe Mr. Dara, for you, there's this issue, and Mr. Bimbola kind of touched on it, the balance between, continuing to find that growth, but also trying to meet the requirements. So, having capital planning as a consideration on the one hand, but obviously understanding that within these thresholds, you still need to deliver growth. How are you thinking about kind of balancing those two things side by side?
Good morning. Good morning, colleagues. So recently, the latest consolidation in the entire industry has been the Ludi Pearl acquisition, and I was part of that journey. So I can speak from a practical standpoint. The opportunities that that consolidation is giving is the fact that when two companies come together, you have more funds, right? For the clients today, you don't have a lot of touch points. So some PFAs are not in every city of the country. And so with the consolidation and the need to sort of either merge, like my colleague has said, or get funds, right? What you'll find is that you have more funds available, and then you're able to sort of increase your touch points. Also, what you'll see is that people become more creative.
Okay.
I don't think we have sort of deepened our reach with technology. So in terms of technology, I think we haven't used it at all. So in terms of technology, I think people deploy more. So we now have technology that can sort of look at demographics, psychographics, just to ensure that you're able to sort of give attention to the right demographic. So in terms of aligning that, I think that what you would see is that moving from 1 billion in 2014 to sort of some other 3 years to 20 billion June next year. What you see is that there'll be a lot of available resources for players to begin to think about, I think, the different segments of the market. So the PPP, for example, is hardly undertapped. I think people deploy a lot of resources to that, from a practical standpoint.
Okay, no, great. I think it's great that you touched on consolidation, because that was going to be this, kind of second theme that I wanted to get into. It's the elephant in the room. Everyone is talking about consolidation as a way to kind of meet these thresholds as well. So maybe if I just come to you, Mr. Fabian, just as you see a landscape potentially shifting as a result of consolidation, how do you think PFAs can potentially differentiate themselves and position themselves within this new sort of concentrated market?
Okay, yeah. Thank you very much. Good morning once again, everyone. Okay, you've got to leave it to BusinessDay. That's the organizer of this session. Pension discussions are always topical around the world, really. And you've got to also understand the fact that in Nigeria, the pension reform is actually working. Looking at where we're coming from, just about 20 years ago, we were in a deficit position.
to the tune of almost about 25% of the national GDP. That was a huge figure, really. And trying to flip that to a positive position of about almost 30 trillion naira, as at maybe February or March this year. I think that is remarkable. That's one. Number two, we've also got to look at the fact that pension assets globally are highly concentrated. And what do I mean by that? If you look at the US market, for instance, US has an economy of about $30 trillion. Of course, they have a pension asset to GDP ratio of about 130%. That is huge. The pension asset in US alone is about $37 trillion. That is huge. When you also look at some other countries, you want to talk about Japan, you want to talk about UK, you want to talk about Canada, and add the US to that. Those four economies alone account for about 80% of global pension assets. And you come back to Africa, of course, South Africa, considering the size of the economy and the fact that they actually started their own pension reform much early, they are driving a pension asset to GDP of about 65% as we speak. Nigeria, maybe the latest IMF data is saying that we're just around 8-9%. Of course, we started just about 20 years ago. Yeah. That can only get better. So now, I see a situation where all stakeholders, of course, will play their roles. You see the government driving $1 trillion economy by 2030. Pension industry and the financial ecosystem in general has got a critical role to play in that journey. You've seen PENCOM driving reforms across board, trying to improve contributors net, currently at about 11 million. Of course, you expect that figure to go up significantly, considering the fact that the informal sector in the Nigerian economic landscape is so huge. Maybe you have about 70 to 80 million, operators or individuals, in that space, and they are just coming in gradually. I want to believe that the reform really is well driven, and operators are also on ground to actually take the necessary initiative to ensure that they close this huge gap. And I would like to say that on the back of that, someone has actually described the Nigerian pension reform as a unicorn, right? Unicorn reform, because I see it as blockbuster, really, because coming from a deficit position to where we are today, is really remarkable. And for us, going back to your question directly, is about providing top-notch service to customers, really. That is it. That is the game changer. And if you look at the rationale behind the so-called recapitalization itself, really, it's really overdue. Of course, it's also in line with global best practice. The last time recapitalization discussions were held in the Nigerian pension industry was, I think, April 2021. At that point in time, pension asset was just around 13 trillion naira. Now it has grown exponentially, to about 30 trillion. So recapitalization is necessary, and it's going to, of course, shape the landscape generally. So I will say that, back to your question, is about providing top-notch service to customers, is about customer engagement, is about providing industry updates to contributors, because at the end of the day, this is about customers and it's about customer. So they've got to find a voice. They've got to be able to, someone talked about digital or technology. Of course, the industry needs to improve so much more on digital, and that's what we are focusing on at FCMB Pensions, really. We want to ensure that our customers, regardless of where they are, whether on their bed, in the comfort of their homes, on their offices, they are able to access a platform, that has been designed for them, and they are able to access those platforms to access whatever service, self-service, that they might require at every point in time. So I would just say that it's about driving customer engagement and ensuring that customers have opportunity, to track on real-time basis, whatever is going on, considering their retirement savings accounts.
Okay, so just to distill that, effectively, your approach in terms of positioning yourself in a differentiated way would be to focus on the customer and provide services to the customer that are superior. Mr. Okorinboye, if we could just come back to you. From an internal sort of operational and technical approach, from the PFAs themselves. What do you think you need to do differently to be prepared for this kind of imminent consolidation that we're talking about?
Okay, so I think post the capital raising, and if you do get consolidation, I think one thing that the industry is going to be differentiated by is scale.
Okay.
And the pension and investment management industries globally, scale is always a big differentiator because number one, it reduces your cost to serve.
Yeah.
You can, just thinking of the gap we have, which my colleague mentioned, 70 to 80 million, it will be very difficult for us to reach or close that gap in coverage if we're not going with a digital approach. So
yeah.
I think one thing that one thing that consolidation can give you is scale, which will help you bring down your unit economics and ensure that at least, even though you're able to invest in technology and systems that will enable you close that gap. The other key differentiator from scale is that from an investment standpoint, for example, this is the other area. One of the areas Digit mentioned was that we're going to be moving away from passive towards more active investing, particularly in the area of alternative investing. What you always find is that if alternative asset fund manager, I mean, you're probably an expert in this, is that if you're trying to raise funds from investors, you would not want to go with investors who can't write significant checks. As if the median size, if the size of a pension fund is not very big, what you find is the ability to be able to write bigger commitments to alternative asset investments will be limited, and it's not going to work. So you need big operators who can write bigger commitments so that we can get transactions going. For most infrastructure investments are not small by nature; they are significantly big, and so you need operators who have the scale to be able to deploy, to be able to deliver that, to invest in alternative investments. So on those two fronts, I think first in terms of reaching a customer, and also in the ability to be able to invest, scale is very important, and I think being able to, what that consortium does as an industry, we'll then be able to decisively address these issues. We'll also be able to decisively move the needle when it comes to infrastructure investing, diversifying our portfolio significantly, because the only reason why you're sticking with the passive is because the windows available to you to do alternatives may not be open to you because of your size. So I think what that does is it enables you, what scale does it provides you those benefits. So I think that's where a lot of our focus would be on. One is, as always, customer experience is always the primary goal. The only reason why customers come to you is because you're either being able to invest, deliver them a better savings option that's investment returns, and also give them an excellent customer experience. So those two things, and I think with digital, the world we're living in now, digital has to be a conversation. And then, of course, being able to deliver that assurance on investment, which I think you'll be able to do, not just on a nominal basis, but on a real basis. I think that's what scale will give us. Thank you.
Excellent. So one thing that really stood out to me was the role of scale in catalyzing this diversification we've been talking about into alternate, sort of asset classes. So scale there as a positive thing. But maybe for you, Mr. Aguda, is there an angle where scale then begins to threaten competition? I think you saw within Mr. Ahmad's presentation, he talked about, the fact that the biggest pension, the biggest PFA has 33% of the market effectively. So how do you see that balance of, yes, we want scale, but how do we keep the market competitive and have enough players to keep that going?
Yeah, I think the angle I like to look at this is that capital is not the all in all. Right. So we're moving fivefold from about 5 billion to 20 billion, and that's huge. If you got a raise about 5 times your salary now, you're thinking, how do I spend the money? So I think that's very key. And we've been here before. And the greatest lesson about history is human beings don't learn from history. In 2005, when the banking industry went through something similar, they had huge capital. But 3 years later, we had a lot of collapse. People were lending, oil and gas, capital market. So I think it's how to manage that capital that is the most important thing. So many people will grow bigger, many firms are merging together, but how do you manage that capital? And I think that's most important. It's not really about whether one player has 33% or 5 players manage 70. What I've always said is, if, it's niche, you can be a niche.
Yes, Pascal.
Okay, I think it's focusing on the customer. And
Yeah.
I had a model, which I came up with, and I called it a trip model in terms of what pension funds need to do as they go forward. Number T is technology advantage.
Okay.
Number R is the regulatory awareness. I is the investment acumen, which you spoke about. And P is the people strategy, which is, and that's the most important, because as you grow, I'm looking at Access ARM now. The CIO is here, the acting MD is here, but the business is still running. It's the people.
Yeah.
So when you are growing in leaps and bounds, who's managing my Onisha branch? Who's managing my Kano branch? Can they get the same service they get in Lagos? So how do you scale with people? That's really key. Technology in terms of AI. Where are we on AI? How's the industry on AI? I think Central Bank just came out with an AI policy for banks within 18 months. Cybersecurity. And when you talk about regulatory awareness, in terms of the regulator is on steroids. They're bringing out, regulations, by the second. So how are pension funds engaging with regulations? Are they ahead of the regulator? And then investment acumen, that speaks for itself, just in terms of you want to be able to invest for profits, you want to invest for impact, you want to invest in alternatives. And I speak to some pension funds, I said, do you know you can actually grow faster through your investment activities than even with transfer window or with, acquiring new customers? If you focus and say, I want to invest in this area, I want to be known for this area. So I think it's not just about capital, and it's not about who's the bigger or if there's concentration, but with each individual pension fund, if I'm getting more capital, how do I manage it?
Yeah.
How do I work around the trip, that I spoke about? And more importantly, the governance. From the board down, it has to be, and I'm happy some board members are here, because it has to be led from the board.
Yeah.
Right? What do I want to do? What's my purpose? How do I want to be remembered as a pension fund? How do I bring that individual, I'm different. What pension industry is like a monoproduct. You can't sell anything different, but how do I differentiate with the service, with technology, with people? I think that's really key, and that's what the pension funds need to focus on.
Okay, great. I think you touched a little bit on the risks and the dangers, so I want to go to that as the next theme. But Mr. Dada, just quickly, I want you to hear your own point of view in terms of what this consolidation means for investment strategy sort of changes, and how you also see innovation playing a role in this.
Okay. From an investment strategy standpoint, I'll say that there'll be more money available to PFAs. And I think that the way they would look is alternate classes of investments. So we're looking at things like repos, repurchase orders, ETFs, derivatives.
Okay.
And I think that the real sectors, or things like power, and I think the MD of Access here said it, that I think we're at the level of maturity where we can begin to look at alternate asset classes right now versus the traditional, and just trying to meet real term returns versus where we are today. So that's on one side. In terms of the risk framework, so to speak, I think that today we're at a level where between the operators and the regulator, we've done a lot in terms. I think it's the most, if you ask me, regulated industry today. And I think we've done well. I think what needs to be done is we need to amplify it. So for example, I'll give a very simple example. We have a multi-fund structure today. And from a customer standpoint, when you say high risk, high returns, what they hear is high returns, right? That's what they hear. And so you have people pushing everybody to fund one, right? And then they're there. And suddenly the market goes bearish. And then it comes back to you to say, I'm losing money. He did not hear the high risk part, right? So from the standpoint, just looking at it from that standpoint, I think in terms of educating customers, a lot has to be done. So it's not about it being in small prints, it's 35, 33% across in terms of asset allocation, but there has to be more information available to clients such that they're actually signing off, reading it before we get to where we are. So I think in terms of that, I think the PFAs need to look at it in more detail and not just push people into funds, and so that they're aware of what it is. I think that education and that awareness is still lacking.
Yeah.
Right. Yeah.
Okay. And maybe just one final point, because I hear a lot of alarms. I don't know if that's intentional, but from a governance structure perspective, which you really touched on, back to you, Mr. Aguda, what do you think, what kind of governance structures do you think will be critical at a point like this? Just proper things that actually safeguard us against sort of the risks that may come with this new phase we're getting into.
Yes, so I think good enough, like you said, the pension industry is arguably the most regulated in the country, and just the standard regulatory for boards, just in terms of the non-independent directors, how often they have meetings, who's chairing those committees, the number of committees, the quality of their meetings, the quality of the board members, ensuring that even the board members are being going through a process of training and evaluation, and PENCOM really takes that very important. So PENCOM also ensuring the regulation, that there's going to be digital regulation and also risk-based regulation. So working in tandem with the regulator and the operators, strong regulation, focus boards, down to management, and just down to people issues. I think that's what's going to cut the line.
Okay. And then finally, for you, Mr. Fabiano, just to ask, beyond, he's talked a lot about what you'll do internally from a governance structure perspective. What will you do for your customers? You've mentioned that the customer-centric approach is what's most important to you. How will you engage them specifically so that they understand the changes that are coming?
Okay, so thank you very much. Someone said earlier, the front side, right? I mean, the front side is going to be business as usual. Recapitalization isn't going to significantly affect, the way you manage your fund, as it is. So, of course, customer education and awareness is very, very critical. Whichever way you look at it, you've got to carry them along. You've got to let them know some strategic industry developments, including recapitalization. Of course, as they begin to understand, they will also be able to take some appropriate decision in the way they monitor their account, and also try to see the next thing, the next big thing, happening in the industry. But overall, I would say that, the pension industry in Nigeria, looking at some critical pillars of assessment, really, you look at adequacy. In terms of adequacy, maybe we're not there yet. Of course, you see the regulator doing so much in that regard to ensure that pension savings are adequate and they are good enough as take home when people do retire, and they'll be able to cover their major needs, including healthcare, as the DG said earlier. In terms of sustainability, I think we are sustainable. I think, in fact, if you look at the data, considering the number of people retiring and the new entrants into the scheme, you see a very, very brilliant future. In fact, when you look at the demographics in Nigeria, you have a whole lot of young people coming into the job market, and I believe that the net will be able to bring them in appropriately. Maybe the other thing you want to look at when you look at those pillars really is the impact of the fund itself. We've seen a lot of commitment from the regulator in this regard, saying that the funds will create more impact in terms of infrastructural development, all this diversification into alternative asset classes, and so on and so forth. And maybe the last thing I would like to talk about really is the coverage, which I also mentioned earlier. Coverage, we're not there. In a country where you have about 80 million working population, and we have about 11 million RSA in 20 years, is a good step forward. I believe that we can grow that exponentially with a whole lot of reforms being driven by the regulator and the operators also coming in to see what they can do in terms of bringing in initiatives to drive the number. I think the overall thing to say that the future of the pension industry in Nigeria is very bright.
I think that's a fantastic note to end our panel on. Thank you to all the panelists. And okay, yes. Okay, we'd like to open it up for questions. Quick show of hands, anyone? Okay, no questions. Okay, thank you so much. Thank you all.
Just remain on stage for pictures.
Our Executive Director of Sales and Marketing at Business Day would also join in this photograph, please. Thank you very much to our lovely panelists for a timely and thought-provoking conversation, and our moderator for doing a very excellent job on that panel. Thank you very much. Please put your hands together for our panelists and our moderator today, please. We will take another 2 photographs, and then we'll move to our next panel and presentation, and then we'll be done for today. But quick photograph, please, with, we'll take photographs with our sponsors for today, but we will need to invite our Executive Director for Sales and Marketing at Business Day, Mrs. Ijoma Ode, as well as we're taking a picture, as well as the CEO of PenUp, please. Okay, please, yeah, on the stage, please. Thank you. CEO of PenUp, please. Outside. Okay, we're taking it outside. CEO of PenUp. We also want representatives from our sponsors for the day. Please make your way outside. CEO of Acting MDC of Access ARM Pensions. I know she already went outside. Representative from Zenith Custodians Pensions Limited, Pensions Custodian Limited, from our sponsors as well, FCMB Pension, Awaba, Leadway Pension, Trust Fund Pensions, Northern Treasure Pensions. Just a quick photograph, please, and then they'll be back. So we have our next session now, which is an industry presentation on foreign currency contribution and personal pension plan, roles of the pension fund custodian. And this one is supposed to be taken by the Managing Director of Zenith Pension Custodian Limited, but will be represented by the Head of Safekeeping and Corporate Action at Zenith Pension Custodians Limited, Nkuma Alfred Mazi. Do we have him in the hall? Okay, stepped out. So basically, we already have him. He stepped out already. So Shegun, please, we need to get him back into the hall because we need to go into the session now. Nkuma Alfred Mazi. So we have one more panel, and then we'll be heading home. Our next panel will certainly be on strengthening trust and confidence in the pension sector through innovation and effective governance. And we have another very engaging set of panelists who will be engaging us on this session. So just as we had mentioned, I know that so many people didn't ask questions in the first session, probably because you're also trying to help us manage time. We appreciate that. But if you do have questions, because this is where the policy gets shaped, this is where we take action, this is Business Day. As much as possible, if you have questions, especially for the second session, please put them down. If you don't want to stand up, you can please put it down in writing. If you want to get up, it's free. So please don't be shy. We're able to take your questions here today. We want it to remain as engaging as possible. But just an announcement, just as I had made mention earlier, I did mention earlier that we have something called Premium Business Day. It's the only way for you to get premium stories, exclusive stories from Business Day, and it's called it's basically premium.businessday.ng. That's where you find all of this. So you can subscribe to premium.businessday.ng. If possible, right now, you can please take out your phone and just subscribe to premium.businessday.ng. We have a what's it called going on right now. We have a discount going on right now, and I have a colleague of mine at the back. His name is Michael. He's putting on the gray jacket and black
black inner shirt. I did say pink shirt earlier. I don't know why, but he's putting on a gray shirt. Is at the back. He's waving his hand. So you can reach out to Michael to give you any directive on premium.businessday. On that note, we can go to our second presentation today so that everything can be done on time. So far, so good. We've been keeping the time, and I love that. So thank you very much. Please, let's keep the momentum going with the round of applause, with our smiles, with our engagement, as I make welcome for an industry presentation on foreign currency contribution and personal pension plan and the roles of the pension fund custodian. This will be given to us. It will be standing in for the Managing Director of Zenith Pensions Custodian Limited. It will be given to us by the Head of Safekeeping and Corporate Action for Zenith Pensions Custodian Limited, Nkuma Alfred Mazi. Please put your hands together for him as he comes up stage, please. Thank you very much. Please keep the applause up, please. Thank you. Yes, I have to tell them to do that.
Good afternoon, distinguished ladies and gentlemen. I am honored to speak on foreign currency contribution and personal pension plan with emphasis on the role of pension fund custodians. This discussion is particularly important and is relevant to the theme of the conference, which is sustaining confidence and growth, pension reforms and recapitalization. And this is because the two reforms, they are deliberate reforms that is aimed at growth. And custody is like the backbone that sustains that growth. So it's been said that I'm standing in for my managing director, who is unavoidably absent, Mr. Peter Seledu. So this is our company profile. Zenith Pension Custodian is a registered pension fund custodian, and it's a subsidiary of Zenith Bank PLC. We are one of the foremost registered pension fund custodian, and we are known with our efficiency in operations, and this has made us to actually have low and medium rating in the past years. And our business, we focus so much on investments in robust IT infrastructure, which has actually given us that edge. And that's our mission, our vision. So the introduction of these major reforms, the foreign currency contribution and the pension fund contribution, I mean the personal pension plan, is critical to what we are talking about today. And because that actually provides the confidence and the transparency and the growth that we are talking about in the industry. If you look at what the statistics that we have, in the past 3 years, pension fund has grown by about 22% on a year-on-year basis. And currently we have almost 30 trillion. So going by that, we'll be looking at pension fund assets in the next 5 years to hit 75 trillion. And this is when you've not added these new innovation or reforms, the foreign currency contribution and the personal pension plan. So if you tap into this market and be able to add this market, pension fund assets in the next 5 years will be hitting over 100 billion. Mind you, Nigeria has a population of 240 people, and the workforce is about 130 million people. And in that workforce, which is 130 million, pension fund contribution is less than 10%, and 90% is made up of the informal sector, which is this personal pension plan that we are talking about. So if we're able to tap into that space, you can imagine the quantum growth that we are going to record in pension fund assets. So there are actually major fund reforms. So why the role of pension custodian in foreign currency contribution and personal pension plan, why it matters? We, just like the other speakers have said, pension fund has evolved over time. It has evolved over time that we are not focusing now on deduction from salary. We are focusing on this space that remains untapped. That is the personal pension plan, and of course the newly reform, which is foreign currency contribution. And there's a need to attract another kind of income, another kind of contribution. The diaspora, to attract diaspora and foreign exchange earners, to deepen informal sector coverage, to strengthen confidence through governance and custody. If we want to do this, in line with the theme of the conference, there has to be trust. Let's remember that this sector is not mandatory for them to come and join the pension fund space. But if they have the trust that their money is saved and that they will get their money whenever they want their money, this is going to attract them to actually come and involved in the contribution. So both foreign currency contribution and personal pension fund, personal pension plan, they are the reform tools. They are the reform tools that are meant for growth and resilience. So with the recapitalization reforms, confidence matters more than ever. And foreign currency expands foreign inflows into pensions, while PPP broadens inclusion. So both growth without trust, like we said, will fail. If you are growing and the contributors, they don't have trust in the growth, of course, they are not going to continue to contribute. And that is where the role of pension fund custodians come on board. And without them, that will not bring the confidence that is needed in that informal sector. So, pension fund reform context. Of course, we have the Pension Reform Act 2014 and also the guidelines that the Commission has issued with regards to the foreign currency contribution and the pension, personal pension plan. And of course, the latest recapitalization agenda that the Commission has issued. So the recapitalization has raised expectation about capacity, governance, and resilience across operators. When pension fund, when the operators, when they recapitalize, the governance and the capacity is going to increase. Of course, there will be more money for them to invest in governance. They will have more capacity to take on, invest in infrastructure, IT projects to position themselves for the expected growth in pension fund. So the emphasis today is no longer on accumulation of pension assets, but we are talking about how are the risks managed, how do you manage the risks, and how strong is the operational controls, and how effective the contributors' assets are protected. So talking about the protection and order, that is where the custodians come into place, because they provide the assurance that the pension assets is actually safe. So talking about the foreign currency contribution, the foreign currency pension contribution, they allow eligible contributors to remit pension fund in foreign currency. Before now, if you are earning in dollars or if you are living outside the country and you want to participate in the pension fund scheme, you will not have the opportunity to do so. But with the introduction of the foreign currency pension contribution, we have Nigerians living and working abroad who can participate. And we also have Nigerian and foreigners in Nigeria earning foreign currency. They can participate in that space. And what is the outcome? We have diaspora participation, foreign currency diversification. You don't rely only on Naira. With this diversification, you'll be able to hedge inflation, you'll be able to manage devaluation, and you'll be able to equally manage fluctuation in the exchange rate. So foreign capital inflow into pension too. You have the dependence of contribution from Nigeria. Wouldn't it be again with this contribution? It can actually flow from all over the world. Anywhere that you are, you can make your contribution. So foreign currency contribution allow Nigerians to tap into global earning power while keeping the retirement savings anchored within CPS framework. So, like I said earlier on, we can imagine the growth if we actually tap deep into this space. So, what is now the custodian role in the foreign currency contribution? Of course, we open and maintain USD-denominated custody accounts. We receive and safeguard and settle foreign currency inflows. We ensure that transactions are settled same day. We have robust technology that ensures that once those payments are made, we receive them same day, and the report goes to the PFAs the same day. We provide secure FS collection platforms. Of course, we report to NFIU suspicious transactions and payment in USD above $10,000. And we also do daily and monthly remittance to the commission. All this bring the needed trust and confidence in the industry. So the impact is that there will be confidence, there's transparency, and there is regulatory trust. So when the contributors, when they know that there are layers of control, of course, they are going to be they will trust the system and they'll be able to continue to contribute. So as pension fund custodian, we are like the goalkeeper that safeguard that asset. So without us, the contributors, they will not have the confidence in the system for them to be able to make those contributions. Then for personal pension plan, this is a branded micro pension plan. And the Commission has rebranded this with a lot of incentives and sweeteners. And this sense is for the industry to actually be able to, those informal sector, the artisans, the self-employed, the professionals that are outside the payroll system will be able to have opportunity to participate in the program. Look at it, the formal sector, if they are contributing, the voluntary contribution, people normally contribute even more than the mandatory contribution. And that, if you come to this space, people contributing in voluntary contribution is going to actually make everybody to actually tap into this space and be able to grow the pension fund assets. So the custodian role in pension and personal pension plan, as custodian, we receive personal pension contribution on behalf of the PFAs, and we hold personal pension assets in trust for the contributors. We ensure instant or next-day crediting, and we settle the investment and the payment of benefits. And of course, we use CBN-approved platforms to be able to carry on these tasks, and we render returns to the Commission. So this rendition of return to the Commission actually brings the needed confidence in the personal pension collection space. So the custodian and sustained confidence in the pension industry is not by slogan. It's not by slogan. It is built by segregation of assets, strong internal control, transparent settlement processes, and verifiable returns. So all these things, when they is in place, of course, you will see the result will be stronger contribution trust, strong system credibility, and the custodian and the groups, how we support growth in the industry. So we support high asset volume post recapitalization. Of course, with the capital requirement that we have, we'll be able to support investing in infrastructures and IT infrastructures that will be able to support this contribution post recapitalization. We enable cross-border and digital contribution. We strengthen investments, settlement capacity, and of course improve governance for long-term returns. So the key takeaway of this is that foreign currency contribution and personal pension plan, they are strategic reforms for confidence and growth. So pension fund custodians, we are like trust anchors, risk managers, settlements engine, compliance enforcers. Sustainable pension growth requires strong regulation, it requires strong custody, and it requires strong governance. So it's everybody's business. It's not the business of only the custodian or the pension fund administrators, but it's everybody's business, including the regulator, the custodian, and of course, the administrators. So in conclusion, we say that as Nigeria advances pension reforms and recapitalization, confidence must grow alongside with the assets. So if the asset is not growing alongside, if confidence is not growing alongside the assets, there's going to be trouble. So ultimately, contributors trust the pension system, not because of regulation, not because of the PFAs, but because they are sure that the assets are safe. And that is the assurance that is fundamental and what the custodian provides. Thank you, everybody.
Thank you very much, Mr. Nkuma Alfred Mazi. Thank you very much for that very brilliant presentation. And finally, we're hitting the home run on our conversation this afternoon now. So yes, we're hitting the home run. And this conversation, the next panel and the final panel will be on strengthening trust and confidence in the pension sector through innovation and effective governance. And what we want to do on this panel is to examine governance frameworks and accountability mechanisms, and also to leverage technology to improve operational efficiency, as well as to enhance engagement and financial literacy, to build a culture of trust and long-term value creation. And on this panel, like I always say, is certainly in no particular order. So as I bring them up stage, please make sure to put your hands together for them. The Holy Book says that the glory of the latter will be greater than the former. So yes, please make the applause louder this time around as they come up stage, please. Thank you very much. First on this panel is the Chief Executive Officer for the Pension Fund Operators Association of Nigeria. And just as I always do, I'd like to just speak a little about them. She's a seasoned executive leading the Pension Fund Operators Association of Nigeria, which is PENOP, where she drives strategic direction, stakeholder engagement, and industry advocacy to strengthen Nigeria's pension ecosystem. She has over 20 years of cross-sector experience where she has worked across business development, information systems, and construction in both public and private sectors. She's a certified Prince 2 and Prince 2 Agile practitioner with a strong focus on process investment, improvement, and organizational efficiency. She's highly skilled in brand management, change management, and stakeholder engagement, and has successfully led initiatives across commercial and risk management functions. Distinguished guests, ladies, gentlemen, please make welcome Antonia Ifeanyi Okoro, the CEO of the Pension Fund Operators Association of Nigeria, PENOP. Thank you so much for keeping the applause coming. And next on our panel today is a fellow of the Certified Chartered Accountant Association, FCCA, is a fellow of the Institute of Chartered Accountants of Nigeria, ICANN, and a member of the Chartered Institute of Taxation of Nigeria, CITN, where he also holds a BSc in accounting from Abia State University, Uturu, and an MBA in management from the University of Nigeria, Nsukka. While at university, he was awarded the Accountant of the Year by NOASA. He currently serves as the Safekeeping and Corporate Actions at Zenith Pensions Custodian Limited, where he previously spent 17 years in banking, including over 16 years at Zenith Bank PLC, where he served in leadership roles such as head of operations across multiple branches and in funds transfer. He has mentored numerous ACCA affiliates and is highly experienced in operations, compliance, and leadership, attending various professional trainings. Is also a registered member of the Financial Reporting Council of Nigeria, FRCN. Distinguished guests, ladies and gentlemen, you saw him before, but please make welcome Nkuma Alfred Mazi, the head of Safekeeping and Corporate Action at Zenith Pensions Custodian Limited. Please keep clapping till it comes up stage, please. Thank you. And next on our panel today is a dynamic business leader with a strong track record in driving growth, strategic partnerships, and market expansion across fintech, e-commerce, and SaaS sectors. She's armed with an MBA in marketing, where she has consistently demonstrated her ability to identify new markets and position organizations for high-value opportunities. In her current role at Awaba Nigeria, she leads market strategy and commercial operations, where she focuses on SaaS innovation, financial inclusion, and revenue growth. Prior to this, she had held key leadership roles at Aleph Group, One Land Africa Limited, and Skybank, where she built and managed impactful B2B relationships and executed growth-driven strategies. Our experience also includes serving as the regional manager at More for Africa, where she happened to significantly contribute to revenue growth in West Africa. She's very result-driven, and she has a very decisive leadership style. Please make welcome Oluwayemisi Obitayo, the Vice President for Business Growth, Operations, and Partnership Management at Awaba Nigeria. I see the applause is going down. Thank you very much. And next on our panel today is a seasoned pensions and business development executive with over 20 years of experience in driving portfolio growth, client acquisition, and sustainable asset expansion within Nigeria's pension industry. He has built a strong reputation for delivering strategic growth and enhancing market penetration across leading pensions institutions. Prior to his current role, he held senior leadership positions at FCMB Pensions and Trust Fund Pensions Limited, where he contributed significantly to asset growth and business expansion initiatives. In his current capacity as Executive Director for Technical at Noren Berger Pensions Limited, he provides strategic oversight and drives operational excellence across key functions. Distinguished guests, ladies and gentlemen, please welcome the Executive Director for Technical at Noren Berger Pensions Limited, Mr. Rabiu Adamu. Please make him welcome as he comes up stage today. And to moderate this panel for us today, certainly very well represented, is Wonu Kunle Bello. She's the head of fund ratings at Agosto and Co. Limited. Please make welcome Wonu Kunle Bello, who will be representing the associate director and head of consulting at Agosto and Co. Limited, Jimmy Ogbogbine. Thank you very much. So the panel, just as brief and engaging as the first one.
Okay. Good afternoon, everyone. Thank you for joining us this afternoon. This is the final panel session. And after all our conversations earlier regarding recapitalization, we'd like to tidy things up a little bit, right? So we'll be talking today about governance, digital transformation, and the impact that it has in driving participation in the pension industry. So I would like to start with you, Ms. Ifeanyi Okoro, as the CEO of PENUP, the umbrella body. In your view, what are those governance frameworks,
Ladies and gentlemen, we actually have one more panelist who's supposed to join in on this panel, which I skipped earlier. So please, pardon me as I make him welcome. Please, just once again, we have to read his bio. Sorry for the break in transmission. But we have to do what we have to do. So he is a seasoned professional with over 22 years of post-graduation experience across the public and private sectors, including more than 18 years in Nigeria's pension industry. He has built strong expertise in business development, strategic marketing, and stakeholder engagement within the financial services sector. He holds a postgraduate diploma in business studies from the Rivers State University of Science and Technology, Port Harcourt. He's also a member of the Institute of Public Management and has attended several international executive programs, including at the London Management Center, the International Institute for Management, Los Angeles, and the Regenesis Business School in South Africa. He also is an alumnus of the Lagos Business School Senior Management Program, where he continues to bring valuable insight into pension growth, market expansion, and customer engagement in Nigeria's evolving pension landscape. Please, because we missed him the last time, so please, this is my way of apologizing. Please make welcome Mr. Peter Otili, the head of business development and marketing at South Trust Fund Pensions Limited. Please keep the applause up, please. Thank you very much. Thank you, Peter Oliti. Thank you.
All right, thank you. I'm very welcome, Mr. Peter Otili. Oliti. Okay, thank you. Okay, so back to you, Madam. As the umbrella body for operators in the industry, it'll be good to get your perspective on, the sort of governance frameworks or accountability mechanisms that you think should be encouraged within the industry amongst operators to ensure that there's consistency in compliance and to sort of promote transparency for participants in the industry. Thank you.
Thank you. Thank you so much. Good afternoon, everyone. Once again, thank you all for staying until this time. It's been a remarkable conference, and we hope we will continue to deliver on that promise even with this panel. As has been mentioned, I'm the CEO of the Pension Fund Operators Association of Nigeria, which is the umbrella body for all licensed pension fund operators in Nigeria. We have the pension fund custodians, as we've seen the presentation from them. We have the pension fund administrators, and we also have the closed pension fund administrators making up our membership. My question was on what governance frameworks are required within the industry to enhance trust, to help with clarity of purpose, and of course to expand reach. And I think it's not really about sort of physical frameworks, but what they achieve. And I think what the points I'm going to touch on really pull together all of the presentations we have seen so far, which highlights that the pension industry is really a unicorn in the Nigerian environment. It's highly regulated, and there is so much scope for growth. We are 20 years plus in our journey from inception, and the world ahead of us is really our oyster. And a lot of the frameworks that need to be in place in terms of a regulatory landscape, in terms of the technology infrastructure, in terms of that customer-centric focus and realization that our retirees or our benefit recipients should be at the heart of everything we do as an industry are already in place. When I think about the landscape going forward and the governance frameworks we need to embed going forward, it's really about selling that message, and it's really about scale. We have a lot of the infrastructure already, but we are a young industry, believe it or not. So for us, it's really about doing more of what we have, and of course evangelizing so that people realize what the pension industry does in Nigeria, its potential for growth and its potential for scale. So I've come up with 3 themes where our governance infrastructure needs to focus going forward in terms of selling that good news story. For us, it's about the fact that the pension industry is something you can trust. We already have that infrastructure in place in terms of how our governance has been constituted within the Pension Reform Act, which, as was touched on by an earlier speaker, is the separation between the custodian, who are the people responsible for holding the funds that are in our custody, and the administrators, who are the people responsible for managing that fund, investing that fund, and delivering return to the retiree. So we need to explain that separation of power and that ring fencing already exists so that we can build trust within the populace and deepen trust within the populace. The second point is on access, and this is leveraging technology. We need to embed and scale how we leverage technology, and that infrastructure or that governance framework is key. We are already doing a lot of that, and you'll hear from our bar here, who are the newest members to the industry, the approved pension agents, where we think about how can we make it easy for retirees to get access to their funds, and also how can we expand those who are not mandatorily covered within the Pension Reform Act, so the informal sector, foreign exchange, or foreign earners, as has been mentioned. And then lastly, when we put those 2 things together, we grow in reach. We are only about less than 10% of the population of Nigeria are mandatorily covered by pensions. And there is better coverage within the private sector, as has been mentioned, than within the public sector. And then when you go from state to state, is again a completely different picture. A lot of low state adoption as currently stands today. So with the skill, with the access, with evangelizing about the trust and the mechanisms in place that enhance all of that, and the infrastructure that we already have in place that sort of enhance all of that, we're able to expand our reach. So that's really where we want to get to as an industry. Thank you.
All right, thank you very much for the passionate feedback. So I'll be moving back to you, Mr. Mazi. When you were speaking earlier, you described your role as custodian, as a goalkeeper. So using that same, analogy to describe yourself within what you do within the industry, can you speak to how governance, the governance frameworks that exist, and those things that you think we can do in addition to ensure that we continue to promote trust amongst contributors?
Thank you so much. Thank you so much, and good afternoon once more to your audience. Talking about trust, what brings about that trust? One of the things that bring about trust is governance. The governance structure is very key, and innovation is as well very key. And the pension industry has already an internal governance framework inbuilt, just like the first speaker has said, the separation of duties and independent oversight by both the pension fund administrators and the pension fund custodian. But that notwithstanding, like she earlier mentioned, the pension fund administrators, they make the investment decisions, while us, we settle the decisions that they've already made. So you don't have one person starting the transaction and ending it. And as a result, it brings transparency, it brings efficiency, and when the contributors know that, look, this my money I'm giving to one person. It's not one person that handles it. There are other people that have independent oversight. Of course, they will have trust in that system. They will believe that that system works. Apart from that, as a custodian, you equally have governance framework, the governance oversight that ensure that those pension fund assets are protected. Number one, you have the board of the directors that give oversight to management, and you have the management class that take care of the day-to-day activities in the pension fund. You also have the control guys. You have the internal control that ensures that there are dual check, there are exception reporting, and of course, there are reconciliations. You have the compliance team that ensures that not only that the PFA obeys regulation, but also the PFC. You have compliance culture there. You promote the compliance culture in such a way that every person wants to obey the regulation. And again, you have the internal auditors that provide assurance. You also have the risk management guys that look at the potential risk that will affect the fund, and of course, identify it. If they cannot eliminate those risks, they will be able to minimize the risk to the barest minimum. So when you look at all these governance structures that is inbuilt in the system, you will know that the trust, the contributors will definitely have trust in the system.
Great response. Thank you very much. I'll move to you, Ms. Obitaya. And, you know, when you think about our bar, you know, we think about it as innovative. So, you know, you've done quite a good job, you know, bringing in underserved persons and largely people from the informal sector, which is an area that the industry really needs to break into to get that critical mass that will drive it, you know, going forward. But from your perspective, you know, how do you think governance frameworks, accountability practices can be innovative to further largen that that base of, you know, informal contributors who, you know, like the previous speakers have said, do not have a mandatory compliance practice for pensions. So if you could just please give us your thoughts.
Thank you. For us at our bar, we do not see governance as structure, but building trust as skill, especially for the new joiners of the pension scheme. As we all know, Nigerians' workforce is about 80% informal. I mean, Nigerians' workforce is 80% informal, and majority of them have been left out of this pension scheme. And basically because they do not understand the system. Some of them do not even know the system. The system that you don't know can't come into it. The system that you cannot understand, you don't stay in it. So we have worked our way through communities that exist by being intentional. It's not just about talking about it, but being intentional about the scheme and ensuring that we do a lot of sensitization and penetrate these communities that exist. Like we have the trade unions, market associations. People don't even know how the pension system operates. And because they trust the systems, they are in this system, they live the system. And if we have the leaders who tell them, oh, this is how the system works, and they can see examples of how it has worked for those in the system and those that are in the formal sector, then they can key into it and then be comfortable to come into the system. Thank you.
Thank you very much. I think from what you've said, what I'll take away from that is there's a significant need for market education. And I think that's perhaps, we'll come back to you as the body. But thank you very much. Mr. Adamu, again, Lauren Berger, relatively new entrant into the system. You've built quite significant impact since your entry. Again, I would just like to get your thoughts on the role of governance structures, accountability in sort of managing risk, and again, creating that perception of trust that this is a system that people can trust and participate in.
Okay, just to put it in perspective, Northern Beja is not new in this system. We've been in operation since 2006, that is a year and co. Northern Beja took over in 2022. Now, moving forward from there, back to your question, raising the confidence level of contributors, looking at the risk mitigants, of course, involved in the entire system. When you look at the scheme, as been said by previous speakers, the scheme on its own has tripartite arrangement. Tripartite arrangement in the sense that there are a lot of safety nets embedded in the entire Reform Act 2014 as amended that raise high level of confidence on the contributors' point of view. Now, the scheme on its own, of course, looking at the objective payment as and when due, if we cannot achieve that, there is no way contributors will have confidence. As of today, I want to believe that the 19 PFAs currently licensed are doing what they're supposed to do, closely monitored by the regulatory body, that is PENCOM, and of course, at the same time, ensuring payment as and when due. Now, because of the safety nets embedded in the scheme, you could also believe with me that there is low risk factor with regards to loss of funds. You hardly find, said by other speakers, well ring-fenced. Ring-fenced in the sense that looking at the separation of roles and duties, the PFAs, the PFC, and of course the Commission standing tall to slighting the activities of these operators. So looking at the risk, well, of course, we have a lot of framework, governance framework in the entire system, looking at the departmental structure, the organogram approved by the Commission. You find out that there is compliance, control functions, of course, audit, and of course, risk department doing things differently to ensure all risk embedded in the system are fully mitigated, ranging from onboarding all the way to growing the funds, and of course, up till the point of payment as at the point of retirement. So from an Mbeja perspective, we're doing it great. We're in line with the regulatory framework. We're fully compliant. We're doing it the way it ought to be done. Thank you.
All right, thank you very much for that. Back to you, Mr. Otili. I hope I pronounced it. Oliti. I'm sorry, it's a bit of a tongue twister for me. So again, just a final note to wrap up our conversations on governance before we move to other things. Again, just your thoughts really in terms of governance, again, building trusts at large and driving participation and stronger, asset base for the industry.
Okay, thank you very much. I think one of the speakers earlier alluded to what happened in Chile, right?
Yes.
So going back to the Chilean model, the AFPs initially in the 2000s were about 21, and as we speak, they are just 7. Now, the secondary reason after the M&As for the shrinking has to do with governance, engagement, and service. So coming to us, well, I feel governance is everything. Governance is key. Is a strategic promise, is commitment to integrity, consistency, and long-term stewardship. So for us at Trust Fund Pensions, our governor has confidence in the system. Yeah,
All right,
thank you.
fantastic. Thank you very much. So just, the second round of our conversation will be focused on technology. The second round of our conversation will be focused on technology, technology adoption, how that drives operational excellence, which is, something you just touched on, Mr. Oliti. So I would back to you, Madam Ifeanyi Okoro. So now that we've spoken a little bit about, or we're segueing into the conversation on operational efficiency, in what ways do you think, as an industry, as the body responsible for operators, how can we foster that sort of environment where there's technology adoption across board to sort of promote transparency in the way that we do things, and again, finally, to build trust? So we'd just like to hear your thoughts on that.
Thank you once again. Yes, so technology, the use of technology and technology adoption is really where we are in our maturity landscape at the moment. So pensions were revamped or reformed, and the Act was reformed in 2014, and we've been deepening access, we've been deepening reach, we've been deepening take-up to get to a point of maturity where we can now leverage technology to scale. And so we're really at a pivotal time in our history, for want of a better description. We are already using technology in several ways and at several points in that life cycle journey of a pensioner. So at the point where you join the pension system, whether you join as an informal worker or you join as a formal worker, we're using technology to make that onboarding process as seamless as possible, but still safe and still secure, because ultimately we want to be able to identify you throughout your journey within the pension system and up until the point where you access your benefits, hopefully at retirement. Also, during the life cycle of your pension, we're using technology as well to help you keep on top of where your pension sits. So if you have multiple funds, as will be the case when we start to go into the personal pension plan, where you can make a voluntary contribution as well as your mandatory contribution, which comes from your employer and your role as an employee, you want to be able to have that transparency that a lot of the operators on this panel have mentioned, in being able to be sure that your money is being accounted for, is being invested well, and you can see its growth, you can see the return. So you have that confidence about your retirement security. And we leverage technology in that landscape, and we're deepening that process. Finally, at the end of your life cycle, where it's time to access your benefits. And it's important to mention that pensions are not only accessible on retirement, throughout your working life. There are various points in time when you can access your benefits. If you're unemployed for a period of time, if you have a health challenge, if you would like to get a home, and so on and so forth. All of the points that go back to the DG's keynote address, that pensions need to do more in the lives of the everyday man.
This investment proceeds are being reinvested. And when it's being reinvested, what you are getting is more money, which in turn is growing the pension fund asset. So technology is actually the great enabler in the pension fund ecosystem. And again, too, the dependence on technology equally lies with cybersecurity and data integrity and even data protection. When the contributors know that you've invested so much in cybersecurity, you have IT governance framework, you have secure IT infrastructures, they are confident that their asset is safe. So we should be looking forward to having a robust IT infrastructure and IT framework post recapitalization, so that the pension fund operators will strategically position themselves for this anticipated growth in the pension fund industry. And with that, of course, they are sending signal to the contributors that, look, they are doing what they need to do. Recently, PENCOM, they gave approval to some of the PSSPs so that they will enable the collection platform in such a way that as you are sending your collection, you are sending your payment, you are sending schedule. And that report is going to go directly in the payment space to payment to beneficiaries and the retirees, we have internal solutions that we've deployed in such a way that we've integrated with the PFAs and we've also integrated with the bank. And what does that automation do? It enables straight-through process that when the PFAs initiate the payment with little or manual intervention, we'll send it to the bank and the bank will be able to make those payments. When contributors are seeing that, they will of course have trust and confidence in the system.
Thank you very much. Ms. Sobitayo, at our bar, you've always you've leveraged technology in delivering the service that your current offering. So I think the question to you is a little different. It's how much more, to what degree can we further leverage technology to sort of broaden that access to the very large informal sector that we have? So, yeah, over to you.
Thank you. So at our bar, as mentioned by the earlier speakers, technologies are the heart of what we offer, right? And the goal is to make pensions simple for the everyday Nigerian user and practical for them also. And with the advancement and adoption of technology, especially mobile technology, at over 80%, it helps us to meet these contributors, these people who were formerly excluded from the pension system where they are, especially because most times they don't want to leave their comfort zone to go into the four corners of the bank to make these transactions that they do not even understand in the first place, right? And so what we've done is to ensure that we make it simple, such at their fingertip. Anyone who is either financially literate or not, or who is educated or not, can operate a mobile phone. Can at least point to a few numbers and call contact. And as well, we've ensured that pension contribution is also that seamless. We've also gone further to partner with other PSSPs who have POS agents scattered, millions of POS agents scattered across the nation to ensure that we have a platform called PenPay where they can onboard for pensions on the platform, and also
you have the growth PPP and the conservative, and you have the default that you need to write before you can be moved from conservative to growth. These are decisions that the contributor need to know beforehand and make those decisions that will affect the return that is going to get. But if we are not
connect with the informal sector that we, so desperately want to reach.
Thank you. This question is in time. So I'll first start with bite-sized, simple education, as against the big grammars that we throw around for this informal sector who do not even understand it. Like last month, March, which was International Women's Day, it's been tagged Women's Month generally. I mean, the regulator did a good thing and went into all the 6 geopolitical zones in Nigeria and into different markets, into different associations to enlighten them, to tell them what pensions was about. And these people not just registered, they also remitted on the spot. And then at that spot, we were asking, how do we continue these contributions? Because they now understand it, because it's now personal for them. And if it's personal for them, it's going to be natural for them to continue these contributions. And also, I mentioned earlier, being part of the communities, I mean, educating the communities that they are already a part of, communities that they trust, they know exist, they know it has given them results in previous times. So is the adoption of, stories over theories. It's telling them this is the story of this person and it has worked. As against saying, look at this is the way it works on paper. They don't want to see that. They want to see it working in somebody's life. They want to see it. They want to see the success of what we are telling them. They want to have a look and feel of what pensions is, and then they know that their future is secured and they can benefit from it. Thank you.
All right, great. Thank you very much. Mr. Olite, I'll move to you again. As a pension fund administrator, it will be good to also hear your thoughts on how, again, we can deepen reach across, different categories of operators within the contributors in the market. So just your thoughts, your experience, and what you think the industry can do differently to sort of increase reach.
Okay, so let me just say specifically that at the end of the day, it's about building relationships than managing actions, right? That's what all this is all about. Now, let me just relate it somehow. If you go to the hospitality industry, let me say a hotel, for instance, you walk into a 5-star hotel, there are 3 things that will determine whether you remain there or you come back again. The entry or the welcome experience, the staying experience, and the departure experience. So it's not far-fetched from what we have in the pension industry. What keeps a client, number one, is the services that is rendered, the processes and all that. So what I can say here is in doing what we have to do as a PFA, we want to, or we should, as a matter of fact, make our messages clear and simplicity, as simplified as it can get, right? So that the ordinary contributor there can be able to relate, make your messages relatable to the clients out there, right? That's simplicity. Once that is able to be achieved by the PFA, then you can be assured of continuity at the end of the day.
All right, fantastic. Thank you very much, Mr. Adamu. Mr. Oliti, and finally, Mr. Adamu, there's a growing emphasis on data-driven decision-making in pension management, not just pension management, pretty much asset management in general. So again, we'd just like to get your thoughts on how you think innovations when it comes to investment monitoring, reporting systems, really risk management can foster transparency, again, with the end in mind to deepen reach, build trust in the system. If you could just talk us through your thoughts on that.
Okay, thank you. When you look at this holistically, the whole center of attraction is the contributors' confidence level. I could recall 20 years back when this scheme started, the major issues was to address the contributors, or rather the prospects' skepticism over the scheme, because so many schemes then failed, and of course they didn't see the light of the day. Now, we battled seriously in order to ensure we convince customers to really believe in this scheme. Today, 20 years down the line, of course, the numbers are there for everyone to reckon with. There is no way you can grow confidence except and unless if there is a structured and highly regulated system. Today, we pride ourselves to say that pension industry is one of the most highly regulated. Now, why is it well regulated? Because of the data. We just run the numbers, over 80 or rather 70, 80 million Nigerians are still there, informal sector, unbanked, if you like, yet to be pushed into the net. Now, looking at this data, you know that, okay, there are a lot of potentials in this industry. Now, when you look at the 11 million asset management, approved existing schemes, additional benefit schemes that result to 29 trillion as of today, the only way through which you can certificate that is leveraging technology, data-driven decisions. You cannot afford to take decisions based on myths, or rather vague decisions that do not have numbers to defend. So looking at all those things, for each and every PFA, it is very, very important for us to take advantage of technology in terms of data. Look at what we could use to process data, and of course, make it seamless and transparently open for the contributors to really have access and, of course, get access at every given point in time with regards to their contributions and, of course, returns on investment. When we sustain that, definitely we shall be there. Thank you.
Thank you very much, Mr. Damu. Thank you very much, everyone, for staying till the end of the session. I hope with our discussions, we've at least given food for thought regarding what it takes to for effective governance, the role of technology, and of course, what we need to do to drive a bit more awareness for contributors in the pension industry. Thank you very much. I think this ends our panel session today. Thank you. Okay.
Not sure if we have any questions, because I know the first panel we didn't have questions from the audience, so I don't know if we have any questions now. However, there's one question here. I might just read it out and just get an answer real quick. This is from Michael. It says, what key strategies should investors and emerging economics adopt to mobilize and deploy capital sustainably while managing risk? Who wants to take this one? Yes, you can take the picture, but whoever wants to take this one can just indicate, so then you can give Michael an answer. Let me also invite our executive director for sales and marketing at BusinessDay for a picture to join in this photograph, please. Okay, real quick, just to answer the question. I don't know if you heard the question I read earlier, so anyone who wants to answer it. I know there's one more person in the audience that has a question, so that can be taken. The question is, what keys, can someone please hand the mic to the other lady so we can wrap it up quickly? It says, what key strategies should investors and emerging economics adopt to mobilize and deploy capital sustainably while managing risk? So that's just one person, please, because what key strategies should investors and emerging economics adopt to mobilize and deploy capital sustainably while managing risks?
Okay, thank you.
All right, thank you very much. We have two more questions from the audience, just two, and we're...
Thank you very much for the opportunity. My name is Amaka Ogobedike. I'm a customer experience advisor. My work has been around the financial services ecosystem. So the pension assets has the capacity to grow to 300 trillion from where it is right now. We're able to get the over 100 million Nigerians into the net. Now, there is something that has beclouded their judgment about the pension industry. A few days ago, some police people were protesting about their pension, one actually threatened to join Boko Haram if he's not paid his pension. So we understand that the DBS, the defined benefit system, is different from the CPS. We understand that. But it's about 100 million Nigerians do not have that understanding. They still believe that people are not paid their pension, there is protest everywhere. So what are we doing to close that awareness gap? Because it's really going to affect the inclusion that we're driving in pension. Thank you.
Yes, thank you. For us at our bar, what we've tried to do is to leverage communities that exist, that these people trust, to educate and for them to see the success stories that exist within the communities, within the systems that they operate. In fact, we've have associations come forward to us to say, okay, we need you to come and educate our people on how pensions work. We need you to come and enroll the members of our association on how pensions work. And also, we have a system that is called the pension ambassador. As far as you know how pensions work, and then we train you on how to enroll for pensions, and then you can enroll your immediate influence community on pensions. You can put them on the PPP pension plan that currently exists, and then the good thing is that you can also earn from it. So a system that you earn from, it's personal to you, it's easy for you to scale it, and it's easy for your next door neighbor to trust you, and even your sister. I think that answers your question. Thank you.
Thank you very much.
Okay, in addition, okay.
Okay. In addition to what she has said, how to bridge the gap, of course, to have a total inclusiveness of the 80 million Nigerians yet to be in the net. It's simple. The agitation from police, servicemen, with due respect, that has been quite a long thing. And I believe National Pension Commission, in collaboration with the management, are doing everything possible to see what they could do in order to address that. It's a long story yet. So such agitation shouldn't deter the 80 million Nigerians that are yet to be in the net. But the only one thing I think, based on historical facts, that we needed to do to have the 80 million on board is federal government intention, as what happens in Rwanda. Kigali, they are very aggressive when it comes to informal sector participation. We are always going there in order to learn. What do they do differently? Federal government there drop some incentives and push participation. It's very simple. When we intend to domesticate such a strategy or initiative, what we need to do, look at all the SMEs related MDS, talking about SMEDAN, the ITFs, the BOI, the NDE, the Bank of Agriculture, and the likes. Their major functions are to impact positively on the SMEs. So how do we get them on board at the point of enrollment? ITF last year, they came up with an initiative called SUPER, Skilled Up Artisans. Over 500,000 youth, informal sector were targeted. SMEDAN, the same thing. Where are the PFS? Where is the government side in order to push for immediate enrollment? These are the people we are all targeting. These are the people that form significant number of this 80%, or rather 80 million Nigerians yet to be. Some of the artisans, they may likely contribute more than what you and I do contribute on a monthly basis. You all agree with me, right? So the only one thing, and this should be a takeaway, is for government to really push for participation through these MDS. SMEDAN, ITF, BOI, NDE, Bank of Agriculture, even CBN to some extent. Even our banks, all these fintechs, we can push, and of course we can get them onboarded. So for Awaba, I think that's also a takeaway for you. Get this, what do they call them? They're not ministries, agencies, right? Get them, yeah, of course, and of course visit ITF 500,000. It's more than enough for you to share to the 19 PFS sitting here. We don't need to rush. Norebeja take care of so area office of ITF. It's just for us to drop the forms. As they are coming on boarding, automatically they will do that. The same thing with Access Trust Fund and of course FCND and other PFS alike. We don't even need to struggle. The potentials are there. We don't need to struggle. The only thing we need to do, get government to talk to these agencies. Let's get them, as they are onboarding them, let them equally do the same thing with pension. A minimum of 1,000 monthly. That solves it. Thank you.
All right, thank you very much. I think that we have one more question. The last one, please.
Thank you. Good afternoon.
the panel. My name is Juliet Easy, and I work in healthcare, precisely sexual health. Yes, and one of the things we do in my space is to help organizations maximize productivity via wellness. So, everybody talks about wellness, and then we just focus on the biomedical. But World Health Organization says sexual health is an integral part of health and it impacts on workplace productivity. So I want to ask that, I have two things actually that I want us to address. The first one is, so for my industry, do you have recommendations? I know it's a bit sensitive because I noticed that there are a lot of organizations here that have their pension, stand, but what would you recommend for somebody in my own space with respect to approaching pension, the organizations that we would choose to work with, what we should look out for, so that we've been having conversations around trust. So what should we look out for in deciding what organization to work with? That's on one hand. And on another hand is, I'd like to know in your space, how do you approach wellness in general among your staff? Thank you.
Okay. What to look out for? Yeah, that's the first question.
Thank you so much for that question. Maybe I will answer it simply by saying our operators have to all follow a standardized framework. So really, there isn't anything different that you would get from one operator versus another operator. The way pensions work in Nigeria is highly regulated, as we've said. If you're an employer of more than 3 employees, you are required to pay a pension for them, and you're also required to deduct a percentage from their salary to contribute into a pension account for them. So you are required to deduct 8% from their basic housing and transport, and you're required to make 10% of the equivalent into a pension account. A retirement savings account is what we call it. And then the role of the operators of the pension industry who are members of PENUP is we are required to look after that money on your behalf until you need it, usually at retirement. And we do that by making sure we're investing it in really high-yielding ventures, various types of ventures, as have been discussed, but we're also making sure that those ventures are safe so that your money isn't at risk. So that's our role. We give you that security net and that safety at the time when you need it the most, usually at retirement. You will get that same service, that same benefit, that same obligation from any operator you go to, in terms of administrator, who are the ones that manage the fund, and also in terms of custody, and those are the ones that actually hold the funds to make sure that they're safe in good custody for you. So maybe hopefully that helps. I hope your organization is paying pensions because they are required to. Please check if your employer is not making contributions on your behalf and not deducting from your salary on your behalf. They are required to by law. Now, well-being, we are all corporate organizations, so our well-being standards, mental health, staff inclusivity, ensuring that the industry is healthy from a well-being perspective is something that we pride ourselves on as well within the industry. We do a lot of staff incentives, a lot of staff training. Each operator can probably give you in detail what they do specifically for their individual staff members. We do those at organizational level, and we also do it as a collective. We recently had a pension industry sports tournament just this past weekend, another well-being initiative. So without taking up too much time, it's something that we pride ourselves on. We want the pension industry to be an attractive employer of choice for anyone that's finishing their career, looking to change careers. And also we want the pension industry to provide excellent customer-centric service to the wider population, which includes both the formal employed and the informally employed. And that's also something we pride ourselves on. Thank you.
All right, thank you very much. I'm hoping there are no more submissions from the panelists. In the absence of that, thank you very much for a very engaging and thought-provoking session. I hope that you all enjoyed it. I hope this was very impactful for you. We can take it away from here. We'll be having the final closing remarks. But before then, quick pictures, please, with the panelists, please. We already did. Oh, okay. Thank you very much. Please join me to make welcome the Executive Director of the for Business Day Sales and Marketing, Mrs. Ijoma Ode, for the closing remark. Please put your hands together for her. She comes up for the closing remark.
Thank you all for staying till the end of the event. On behalf of Business Day, on behalf of the publisher, we thank you all for making the Business Day Pension Conference 2026 a success. The work continues, and together we can build a pension system that truly works for everyone. A special thanks to our sponsors, Access ARM Pensions, Zenith Pension Custodian Limited, FCMB Pensions, Awaba Nigeria, Leadway Pensions, Trust Fund Pensions, and Norem Beja. To all our technical partners, Pen Up, we appreciate you. We say thank you for coming. And thank you for all your support. Safe travels to your various destinations, and we look forward to seeing you year 2027. Thank you all.